All right, guys, I am back again with the Ichimoku weekly weather report. Guys, today's session was a very long session, but still wanted to record it and put it online for you. Today, we talked about basically the market and we dove into a lot of divergences where a lot of members were having issues with divergence. So we wanted to make sure we cleared up all those issues, make sure everybody understood what was going on. So then we just started talking about the market. So in this video, you're going to be able to see a little bit about trading with divergence and also looking at the markets using Ichimoku. So we're getting ready to get at it. So let's go. Here we go. All right, guys, before I get started, main thing is I want to make sure you see my disclosure statement, make sure you understand it. Know that I am not a financial advisor. Anything that I do and show you today is for educational purposes only. Therefore, if you decide to do anything or take upon any trades suggestions that I talk about, please consult with your own financial advisor so that they can discuss the relative risk that you will be taking. All right, so hopefully you understand that and know that. And always, as before I get started, I like to give you a word of encouragement, and especially at this time of the year. I'm coming from John 8:12. When Jesus spoke again to the people, he said, I am the light of the world. Whoever follows me will never walk in darkness, but will have the light of life. So why does Jesus' life bring light to everyone? Because physical death brings eternal darkness. And only Jesus' eternal life, his light planted in us, will keep us alive in his new kingdom for eternity. Jesus is eternally alive because he is God. He came to earth to offer human mankind the hope and light of his eternal life. It cannot be purchased, only received as a gift, but Jesus gives it only to those who want it, those who want to live the way his citizens will live in his future eternal kingdom. So when we follow Jesus, we can avoid walking blindly through the spiritual darkness that sin brings to us. Jesus lights the path ahead of us, illuminating the truth and clarifying our thoughts so that we can see how to live. He removes the darkness of sin from our lives. And what ways have you allowed the light of Jesus' light to shine into your life? Okay, answer that question for yourself. Let him guide you, and you'll never need to stumble in darkness again. Amen. And notice that it says, let him guide you, and you will never need to stumble in darkness again. You will stumble, but you won't be in darkness. You'll have a savior there that will protect you and lead you and guide you. So even though you stumble and you're in that dark stage, you're sure going to come out of it because you have someone to guide you. All right, guys, thank you very much. So let's get started with this today. So today, guys, we're going to just be focusing on Ichimoku, trading with Ichimoku, looking at the market, seeing what we see. I'm going to also be talking a little bit about some divergences that we may see. All right, guys, so basically, let's start off looking at the Aussie CAD, and we'll talk about the divergences when we see them and just discuss them as we go. So starting off with Aussie CAD, you guys could see the market came down to this low here. And like I was saying, I like to look at the divergence when we hit a level. So basically, if the market shows me divergence, that doesn't mean I trade the divergence. Now we're pushing up to this level, like we were saying, and we're looking for the market to correct itself here, or maybe just push all the way straight up one leg. All right, because you could see how it pushed down. You did have some small corrections here. So we haven't really had a good correction here. We may be getting one now. I think we get to this level. When we get to this level, this is when we're going to start really thinking about what the market's going to do. Is the market going to break through? But there's some points where I'm going to be looking to trade long again, because right now I'm not going to trade long. My bias is bullish. We are a little bit flat, but we're starting to move to the upside as we made this low here. We haven't really made a nice correction to say, oh, we have a higher low. All right, so we want to see that correction. So I'm thinking that that correction can be in a couple areas. So when I'm trading the market, using any tools I'm using, no matter what I'm trading, Ichimoku, whatever it may be. If I'm trading just nothing on my charts, I'm always trading levels though. I'm always looking for levels to trade the market. So I'm looking at horizontal levels. I'm looking at fractal levels. I'm looking at Kijinsen. So those are the kind of levels that I'm looking at to determine what I'm going to do with the market and where I'm going to get into a trade. So somebody said resistance at the 50. Okay, yeah. So you could use that. Yeah, Gary, 50 at the 50. Yes, you can use that as a level that you're going to determine what the market's going to do. So you're saying there's resistance at the 50. So pretty much if we have that resistance at the 50, we may be seeing a correction. And I think eventually we break that level and we push up to this point and maybe break that at about 93132. But where I'm looking for the market to correct itself right now is, see, we have a fractal level here. So we have a structure point. And then I have another little level here that I want to look at. That lines up pretty much with the fractal, so that's irrelevant. So we're not going to even worry about that level. It lines up with this second fractal. This fractal lines up with this fractal zone. So we're looking for the market to pull into this zone. If it violates this zone, then we're going to be looking. So when you look at Ichimoku, you got levels of support and resistance. Your first level is the top of the cloud. Second level is the bottom of the cloud. Third level is Tenkan-sen. Fourth level is Kijinsen. Once we break Kijinsen, then we're talking about the market becoming bearish at that point. But we're going to be looking for the market to bounce in this area, or quite possibly Tenkan-sen. The worst we're going to think about is Kijinsen. This will be a 50% retracement level, okay? If you bounce on Kijinsen. So let me show you. Boom. Kijinsen's always going to be lined up with the 50% retracement level off of a 26 period move. All right, so therefore this is going to be a level where we look for the market to pull back. So I'm thinking maybe here. So this zone is at the 23.6. 23.6 is a very strong level, because what 23.6 tells me is if we can't violate 23.6 and we don't go any lower, this trend is super strong. Okay. That would be pretty much like, let me show you what that would be like. Show you on here. Let's move this down to this point right here before everything happened. So this market was really strong right here. So the market pushed up. Where did it come down to? 23.6 right here. All right. Didn't fall below 23.6, didn't close below 23.6, and continue this move to the upside. When you got a 23.6 retracement that you can't violate, that shows you that the market's in a strong move. All right, it's still a strong move at 38.2. All right, but at this point where we are now, I'm thinking maybe we get another 23.6 if this trend is going to be strong. But if not, we'll see it drop down around 38.2 to the 50 level. So thinking about those levels, I'm going to erase that off my chart, because I'm going to look for the market to either bounce in this area and then look for the trade, or I'm going to look for the market to come into the TK zone. So if it comes into the TK zone, then you might as well just wait for it to break back out of the zone. All right, unless it touches Kijinsen. So I'm giving you some opportunities to look for and understand where to take your trade. All right, so if it comes back to Tenkan-sen and we sit inside the zone, and then we get a break outside of Tenkan-sen, so we break outside of this TK zone. Your TK zone is just between the Tenkan-sen and Kijinsen. That's all it is. You're just between that area. So when the market drops in there and it breaks back above the zone, then that's where you look for taking your trade. Now, the bottom of the zone would be Kijinsen. The top of the zone is Tenkan-sen, right? So therefore, we want to get a trade. We actually want to get this trade here because we don't want to break this structure. But if it does, because we're making a little bit of distance on Tenkan-sen, Kijinsen, we're going to look for the bounce inside the TK zone. Now, the market may not pull all the way back to Kijinsen, so it may pull back midway zone. So if it pulls back midway zone, I'm looking for the close above Tenkan-sen, and that's where it's going to signify to me that the market's strong again. All right, that the correction is over, basically. And then also I could just wait if we do this. So let me draw it out for you. So I'm looking for this. All right, at least. And then maybe we break that. If we break that, then we start thinking this. This is longer term, okay? That's one thing I'm looking for. But then the second thing that I'm looking for is, so that was our one trade opportunity. If we violate here, we're inside this TK zone right here. All right. So then we don't know how far it'll go down. Then if we get the correction, we break outside of the zone, we trade, or else we could wait for the break above the cloud. That'll be another cloud breakout. Then we could take the trade again. At that point, we could go long. Then we would trade up into this area and see if we can violate that area. All right, that's what we would be looking for. But then the market could come all the way back down to Kijinsen here. So here's your Kijinsen. Then we could be seeing this. All right, that's what we're going to look at. So I always have levels where I'm looking to take the trade. I trade levels. I need a level to make a trade. And therefore, there's no trade for me right now because I'm in the process of coming to my levels. If you take a trade mid-frame, then that's on you. I tell people never trade just anything. You have to have a good level to trade because you want to trade a level that's going to hold the market from moving any lower or higher, depending on the direction of your trade. And that's not a guarantee either. Okay. And then second thing is, the farther away from a level you are, then you have to think about your stop loss. Your stop loss needs to be technical. If you're not going to place a technical stop loss, it makes no sense for you to even put a stop loss because you're going to say, well, okay, I can afford 20 pips. 20 pips takes me into this area right here, let's say, right? But I should have a stop loss down here. All right, because this is the structure area where the market could find support. So it could move to your 20, take you out because you're entering here for some reason. The market takes you out and then boom. That's why you shouldn't be entering there, right? You should be entering closer to a level because then you could use the bottom of the level for support and resistance. Here's a level. Then you can have your stop loss below that level. And this can hold the market for you. All right. So you don't just take a trade anywhere on a chart. You need to have a setup and understand where to take your trade before you take your trade. So I already know I gave you ideas of where to take your trade. So don't take a trade outside of those areas because those are the areas that we look for. Again, the support and resistance level of Ichimoku are top of the cloud, bottom of the cloud, Tenkan-sen, and then Kijinsen. Once we break all these levels, then we're heading back down to this point right here. And I don't know if we're going to do that. I'm looking for the market to correct itself and go this way. But I can never tell you what the market's going to do. I just show you scenarios and then we wait to see which scenario is going to play out, if any. And if they don't play out, then we just hold fort and we wait, right? Do I have any questions? I see no questions. William, thank you. I appreciate that. All right, so let's get this. Use that. Let's move through here. I want to show you guys some good divergences because we've been getting a lot of questions on that. Cash Flow said the divergence is the best tool to have in your plan. It's a strong tool to have in your plan. We'll be looking at some divergences, I'm sure. Right now, I think like last time we talked about this, so you could figure we're about a week out of every trade, so out of every chart. So we were here last week, and I said we were pretty strong bearish, all right, but also we had divergences. So I was saying pretty much, I know that I told you guys probably if we close below this level right here, then we could see it probably move back down to this point. Well, what happened? We didn't close below this level. All right. And we could see that buyers are becoming strong in the market. And therefore we crossed Kijinsen and we had a TK crossover that was bullish. The cloud is flat. This doesn't mean we're getting a full blown trend to the upside, but it means that currently the market is bullish and we're breaking levels. Now, we need to violate this high here. That's one thing. All right. So market opens in about another hour and a half, pretty much hour and 35 minutes. But we need to violate this level right here. Okay. So if we violate that level, then we're probably seeing the market move higher. So at that point, I'm going to be looking for my 1, 2, 3 formation. And I can go the bigger term on this one because there are a couple N waves here. All right, but I'm going to go with the immediate big N waves to see where this market right now could go. All right, so what I always do, I use the 1-to-1 formation and I use the N wave So this is part of Ichimoku price observation theory, and this would be my end wave, my end level, my end target. So this is also a one-to-one measured move. That's what people know this as. But in Ichimoku, this is a one. This would be the end level target for your price observation. So therefore, we would believe that the market could move to this level, which would be this cloud up here. So that's what we would think this market's going to do. So all we're saying is that the market's going to do something like this to create this N wave. We already have the N wave developed, and we believe that the market would come up into this area here to complete this N wave level. This is my N level. All right. And that's where I would think the market would go, or go in that area. And you have a thin cloud there, pretty much a thin cloud throughout here, which is the issue. So you have a 1, a 2, a 3. We always like to trade at 3. There wouldn't have been no trade at 3 because there was no level for us to trade. All right. And we weren't looking long at that point. Now that we got this breakout here, we're trying to figure where this market's going to go to. All right. So it could go up into this area here. All right. Or else if it doesn't break level 2, remember what I told you what 2 is? 2 is fluctuation. If you can't break 2, then you're probably going to be seeing a range or like a P wave formation. So I call you seeing something like this. So where the market is now, drop, come like this, and then do this, something like that. That would be a P wave. That's my P wave. Then the market breaks out to the upside or the downside. All right. But at this point, I'd like to see the N wave continue instead of the P wave formation develop, because if we get the P wave formation, then we pretty much know the market's not going any higher at that point, right? And we want to see the market move higher. We don't need this. So we're looking at this area here with this move, but we definitely need to get through this level, or else again, we're going to see fluctuation. And it's not good because we got a flat cloud, and we did roll over a little bit. Then we started to see a little bit move down. All right, but we're flat. We have no real momentum in the market right now. So getting through this level, let's see what happens. How can we predict 3 on the N wave? We can't predict 3 on the N wave. We have to wait to see it happen. We can't predict it. And the reason being is because we never know where where the market's gonna stop dropping. That's why we say we have levels. Like, so let me show you, for instance, let's look at a move to the upside real quick. Say we wanted to take a trade. All right, let's look at a move to the downside. If we're moving to the downside, we got this level here. The market pushed down, moved up. So we're looking to get into a trade. The market's down here, so we're thinking about getting into a trade. Let's go backwards. I could show you. So when the market's here, this is just what I did for you just now, but this is the reverse of it. So right now I would be saying, well, the market, we don't know, but I'm thinking the market could push up to this level. And this is where we would take our trade. So if not, then the market could push up to this level right here. We're looking at the market quite possibly pushing up to Kijinsen. All right. And we don't want it to break this level here. So we're looking at pushing up to Kijinsen. So I would say your N wave would be, you have your 1, your 2. And if we could push up to this level would be level 3. All right. Or else we get up to this level, this still would be level 3. And then we would have our N wave continue as we drop to the downside. So that's how I think about seeing the market in any aspect. So I always tell you there's no trade down here because I want to be trading up here. And that would be automatically level 3 for me. So let's back it out for a minute. So if that's going to be level 3, bring this over here and let's move the market a little bit. See what happened. So it came to the zone. This is where we look for our trade, but we want to get some kind of price action, and we did. All right. So now we would think this might be level 3. All right. And then if it drops, we know for sure it's level 3. We still don't know for sure it's level 3 because we could say, oh, this is where we're going to look for our trade. And then the market moves higher up to this point. But one of these levels will be level 3. And that's one thing that we kind of know. Well, one of those levels might never be level 3 because it could blow through there, and go up here. And then it violates the N wave formation. And then we'd be seeing a new N wave to the upside. But anyway, the market, you found a level and the market dropped. And the reason we could find the level is because we've already learned to just trade fractals all the time. They're always on our list. Kijinsen's on our list, Tenkan-sen's on our list. The cloud, I don't look at the cloud so much. I don't look at trading the cloud levels that much. And then we have our order blocks, all right? And then we have any other horizontal and support and resistance levels and any moving averages and so forth. All those things could be level 3s. Because if I have a moving average that's doing this, coming down here, and we got a moving average and it's coming down here, and the market bounces on that level, that's level 3 because it's still doing the same thing structural wise as this fractal level, right? Or the same thing as this Kijinsen would be doing, or this Tenkan-sen would be doing. But we still have our formation. It never breaks the structure of the N wave. So therefore, if it didn't break the structure of the N wave, this would always be a level 3, even if it goes to this level, only if it even goes here, or even if it goes here. So that we never really know. I couldn't tell you this would have been a 3 level for sure, but with that rejection right there, I definitely would have thought about taking my trade right here because we were trading the fractal zone right here. All right. And therefore that became a level 3. Then we had the 1, the 2, the 3, and then we shoot for 4. So we had the N wave. When we get to level 3, we have a V wave. Then we get to level 4, we do have that N wave develop. And that's where we look at taking our profits. We always need to get through level 2 though. All right. So that's it. That's how you see it. Break the market down and keep it simple for you. Don't overthink the market. Just break it down. It needs to go here. It needs to go there. And if it doesn't go here or there, then what am I going to do? You don't always think there's going to be a trade. You're not always looking for a trade. But when you're looking for levels where you want to trade, and if it does come to those levels, that's where you're going to take your trade. Okay. So right now, like we just said, this could be the level that we look for the market. We need to get through that level 2, okay? If not, we're going to just see fluctuation in here, and I won't have a trade, and the market won't do much. And I don't think you're going to see a lot from the markets right now until after the holiday season's over, after New Year's, once you get into January. So between now and stuff, you may see ranging. You may not see the things that I'm talking about. And remember, always one thing that's going to change what I talk about is the news. So I haven't bring up the news for you guys today. So please check the news before doing anything that I'm showing here. Like if you get to a level, suppose you say you're going to trade because you got to the cloud up here, so you want to short the market because it's a rejection. And on this day, there's major news and you didn't look, and then the market blows right through that level. You're going to be like, well, okay, you didn't know there were news. You got to know there's news. Make sure you know that. All right. So anything we talk about could change just based off of the news. And I believe news will change the structure. It doesn't change the overall structure of the market, but it could change the immediate move of the market for a little while. All right. So for that moment. But I think we always fall back into the technical levels of the market. All right, so let's go to this next. And pretty much same thing. This is the exact same chart. I showed you these last week, and I don't know. Did we have a divergence last week? So this was the 20th. This was where we were. And I think we were talking about divergences. And you could see, again, so remember I talked about that 3 level. So if we look at this, same thing. So we're looking at an N wave. We want to see where this is going to stop. So I'm going to look for the 1-to-1 level off of this N wave. This is the N wave right here. So where's this market going to push up to? It could push up to this level up here. This is the 1-to-1 level. So to push up into this cloud, up to the top of this cloud. Now, if not, we need to get through level 2, and we broke through level 2. We got a crossover. But my issue right now is this. Here's my main issue with this pair right now and getting any farther. Everything is flat. Flat Kijinsen, flat Tenkan-sen, flat cloud, flat cloud. That's like there's no momentum in the market right at this moment. All right. So I'm kind of worried about trading the market. And it was pretty much like that when we were here. OK, but we could kind of see a divergence coming in the market at that point. Actually, no, it was following pretty much. It was pretty much following. So we kind of broke through level 2, but we're right up against strong support and resistance. So we're right up against strong resistance here. So for me, I think I would rather see if we correct a little bit. I probably want to see the breakthrough of the cloud to really signify what's going on here, because we're too flat. Okay, but we could get a bounce here and the market drops to the downside. I don't see any type of divergence that would tell me anything. I do see a little bit of strength in the selling, but you could see right here This is strong bulls. And then we flattened out, so we didn't have strong bulls the last day. It was even. All right, and then we want to see, I believe we're probably going to see a correction. So let's mark our fractal zone. The immediate fractal zone is right here. So we could drop back into this area and then maybe push back out of the cloud, or we could, again, get into a flat market, a ranging market. So I don't really have much for this asset right now. All right, let's move on. My man, you are crazy. William said, he said, in life we must ask ourselves, what would Jesus do in certain situations? Now for me, in trading, I ask myself, what would Carl do? I'm not that good, man, but I appreciate you. Thank you very much. Get to the point where it's going to be, ask yourself, what would I do? Ask yourself, what would I do? Because you're going to be to the point where you're going to say, this is what I would do, and feel confident in it, you know? So that's what you want to get to. Just be that point where you can feel confident in what you're doing, and based off of maybe the stuff that we're learning and talking about. And I do appreciate you, though. And you can see where we are right now, guys, with this Aussie New Zealand dollar. Structural wise, boy, I'll tell you, I would trade this to the downside, because look at the divergence. Now, here's a divergence. So I always find a divergence when I'm looking at the tops or the bottoms. All right, so I'm looking at the tops or the bottoms, and then I want to see a support and resistance level. So let's back up a little bit. Let's back up to this point right here. Let's talk about divergence real quick. All right, so I'm looking at levels, and I'm looking at divergences, and I'm looking at double tops. I want to see the market coming back to these levels. If it comes back to these levels, is there any divergence? Are there strong buyers coming into the market? Or are there strong sellers coming into the market? We had the market trending nice to the downside here, right? But look at what happened right here. So this divergence kicked in right to that point. All right, this was telling us there was some strong buying coming into the market, all right? And then you could see what happened to the market. All right, so Ichimoku didn't help you in this case, and it won't help you in a lot of these cases that I'm talking about, okay? And then the market moved higher, pushed up to this level. When it got to this level, I would have been looking for maybe a divergence here, all right? And there wasn't really anything to show me, but now we got to this really top here. I like to see tops where there's nothing on my left and nothing on both moves up. So nothing on my left here, nothing on my left here, pretty much. We just move right up to this level. So we've moved up to this level, and now we got another divergence. This is bullish divergence. What I see right now is bearish divergence. And it's telling me that the market could be dropping at this point, because there were strong buyers at this point. It looked like sellers took over this market now at this point. All right, and there's a divergence, what we see right now. And I also love this candle formation, and I love what's happening at this level. So you could see we rejected this level, had a big outside day. This is a bull trap, basically. So what happened is breakout traders were expecting this move higher. We broke this high, made a new high, and then broke this whole candle, made a new low. That's a bad sign for bullish traders that are trapped right here. They're trapped in this trade. And the second thing is, yes, I believe that we're probably going to see the market move higher, but I don't believe we're going to see it now right yet, because there's a couple reasons. One of the main reasons is this big C clamp. Do y'all see that big C clamp? That big C clamp is no good. We had it back here, then we saw Kijinsen move a little bit, because when we got up here, then we had this little push to trap these traders, and then the market dropped. All right. But now with this C clamp, let me draw this C clamp out for you. If you look up a C clamp from Lowe's or Home Depot or anywhere, you're going to see what a C clamp looks like, and it looks like this. All right. And then what happens is this C clamp, if you put something between it, it'll get smaller and smaller and smaller and smaller until it clamps down on that, whatever it is in there. All right. So what's in there right now is nothing. We're waiting for price to come into that area, because one of the top things that you want to really think about is when you get this distance here from Kijinsen with price, you're getting far from equilibrium, all right? So that's one thing that you got to think about when you're getting too far from equilibrium. Also look at how far Tenkan-sen is away from equilibrium and look how flat everything is. So when you get that far, there's no momentum to go any higher. We have a divergence. So if I'm just not trading Ichimoku, I'm taking a short at this level. All right, I'm looking to short this level. And then I'm going to look to trade down into this area. So where would I look for the market to continue higher? So right now, I think the market could correct itself, come off of this level and drop to the downside. I think we got some trap traders here. We had a bull trap and the market dropped. So let me push this here. What I'm thinking about is this level first. We could drop into this point. So this would be our zone. Let me make a nice zone for you guys. So I'm thinking maybe the market pushes back into this zone. All right, so we could push into this zone, and maybe by the time the market does push there, we would have a Kijinsen that's a little bit more near this zone because Kijinsen is going to move tighter. Now, when you always get a big distance like this, here's the things that are going to happen. Either the market ranges up here until Kijinsen and Tenkan-sen get a little tighter together, or the market drops back into this area and then moves higher. So you have a big TK zone right now. Look for the market to fall into this area, and then we would be thinking about taking a long opportunity. All of Ichimoku aspects are telling us bullish market because you have a bullish cloud. So you have a Kumo twist that's bullish. You have price above the cloud. You have a TK crossover that's bullish, and you have Chiku span that's bullish. Once we get through this level, pretty much after we correct, I believe, and get through this level or wherever we think about trading, then that's going to be a pretty good move to the upside because we have nothing to hinder us. But now also think, you asked me about how do we know where level 3 is. I say level 3 is right here, right? I say level 3 is right here. I say level 3 is right here. I say level 3 is right here. So it could be anywhere in between here. And I'm going to show you again a level 3 structure. Here we go. So if I'm talking about N wave, right? This would be right now just an I wave. So we would have this 1 level and this 2 level. To get a V wave would be level 3. So say it came there, that would automatically become level 3 if it starts to move off of that level. All right, and then we would shoot for level 4, which would be up here somewhere. That doesn't look like a 4, does it? Let me make a 4 for you. I'll make a kindergarten 4. There we go. But we would be shooting for up in this area, or at least to get back to the 2 level, and hope we don't range in this area. All right, so that's what you would be looking for. So I don't know how far this drop is going to happen. All right, but we always play our fractal levels to make a zone and look for the market to first come to that level or the Kijinsen level. Sometime it may not come to any of these levels. So therefore, we need to see where the market comes into. Let me show you this. Our TK zone, if it drops back into the zone and then it goes back out of the zone, then we could think about trading. And if you're not confident with any of those types of moves, you don't see anything that really makes you feel good about trading, then the last thing you're going to think about is when we do break, then we come back to this level and then we trade. Again, this would be level 3, naturally. All right. This would be level 2, and we would be shooting for level 4, wherever 4 takes us. All right. So again, we would always be trading at level 3 if you trade the pullback way. So you never really have to ask yourself. Let me see. Order block bounce, you think we would come way back down here? And then the other order, there are some other order blocks in here. But basically, I haven't really talked about other order blocks. I've just been going with the bullish and bearish engulfing order blocks only. At this point, until I probably, like I say, this week, put out another video that's going to be full detailed order blocks. Do fractals work with Fibonacci levels? Why do we need them to work with Fibonacci levels? They're separate in their own right. So we don't have to have them work with Fibonacci levels. We just include them as a level. So let me show you what I'm talking about real quick. So let's say I'm a fib trader why can't I still trade fractal levels, right? Because we could do this. So now I go put fibs on here. Let's go from this low. All right, actually we can do it either way. I was going to cluster it, but we'll go here. So here's our 50 level and here's our 38.2. In between these two levels is our fractal zone. So the market doesn't always just sit at that level. Maybe it comes into this point. Maybe the market stops right here. Or maybe it sits right here or right here. So we incorporate the Fibonacci retracement levels with the fractal zone. We don't have to take it away, right? We just incorporate. It's a level. We trade levels. And that's how we trade. We look for levels to trade. So at this point, we're looking for this market to drop. We're going to look for a level and then we're going to trade. We're going to be trading level 3. And we're going to get past level 2. And we're going to shoot for level 4. All right. And this was level 1. This was an N wave here. 1, 2, 3, 4. Then another one started here. 1, 2, 3, hopefully, and 4. That's all we look at. If I don't have these things, I don't trade. All right, so that's how you can, oh, you mean Elliott wave. I'm not a big Elliott wave guy, so I can't really, you can still incorporate it, but I can't really announce it to you because then I'd have to show you some Elliott wave structures. And for me, it's more that I don't really even worry about Elliott wave because I trade Ichimoku wave structures. I don't look for Elliott wave structures. I look for the N waves, which are much easier for me to spot than thinking about the rules of Elliott waves to trade. So I pretty much just, like if I'm talking about wave structure, I'm talking about Ichimoku wave structure and pretty much not Elliott wave structure. And a lot of Elliott wave structure breaks down into Ichimoku wave structure because let me tell you one thing. If you look at like a market, like let's say we're looking at an Elliott wave structure here, okay? The most the biggest wave that you want to catch when being an Elliott wave trader is the 3 wave. All right. So the 3 wave is the most profitable wave because it's going to be that bigger wave. And most of the time with Ichimoku, we could catch that 3 wave because you know what happens when you get to a low and then start your count usually breaks the cloud. All right. So you would say, let me mark this 1. All right. And then your 2 ended here. And then this would be part of your 3, right? But you're breaking the cloud. So a cloud breakout gives you that 3 leg of the Elliott wave structure. So for me, I don't even really think about that because I'm always looking at, if I was an Elliott wave trader, my most profitable wave would be the 3 wave. And I can always catch that by just really trading Kumo breakouts off of lows. I'm going to a lot of times hit that third wave. Other than that, I don't need the other waves because I'm pretty much trading the wave structure of Ichimoku. So I don't really study Elliott wave that much. But I do know it a little bit, but not enough to really give you any kind of detail you want. All right. And the reason I didn't study it more was because I found that I didn't have to, because some of the things that I'm telling you now eliminated me having to know that kind of stuff. All right. So we are not making a lot of progress. So let's move faster because I want you all to see what we got going on. I know there is a couple good trades coming up on here that I want to look at. So again, there was no divergence here in this down move, and the market made this low, but then made a higher low that we haven't violated yet. So then we pushed up, kind of break through level 2. This pretty much, these Aussie pairs look pretty much the same. So where could we go with this move? Either this move is going to sit in this zone again. If it violates this zone, then we may see it come down to Kijinsen. And if it breaks that level, then we're going to be full blown back to the downside. We're flat here. We're trying to roll over. Thick clouds usually resemble bottoms for me. All right. So every area where we look at a thick cloud, it was a bottom. I'm going to just go backwards real quick. This thick cloud created this bottom here. We had this bottom. This thick cloud made this bottom here. All right. This thick cloud is make this bottom right here, and the market started moving up. That's why it flattened out. All right. And now this thick cloud here, well, we didn't have a thick cloud. We had a thick cloud here. This thick cloud here represented this bottom here, and the market pushed up. And that's where you got your crossover. Then it came back down. That's why you got flat. All right. So thick clouds, when you see a big thick cloud and you see a low, start thinking, am I at a bottom? Start looking for support and resistance. Start looking for divergences and those types of things. So then where we are here, this thick flat cloud resembled this low. All right. And anything that I saw could have helped me to know that I was at a low, pushing higher. And now we're breaking structure, and now we're trending to the upside. Doesn't mean we're a full-blown trend, but we're correcting to the upside. All right, so we could move up to this level and drop back down and continue this longer-term bearish trend. All right, or else follow the immediate trend and continue and start breaking upper levels. Now, where we are now, let's see where the N wave is, where the market could move. So we got a 1, a 2, a 3, and then we could move up into this area here. So we would be thinking about the market could move up pretty much to this 1-to-1 level here. That's where I would be looking at. And then, so we're thinking about the market pushing up to this area. And then also what lines up with that area is this fractal here. All right, so we could see resistance here, and then the market drop back to the downside. So currently what we're kind of thinking is maybe we see something like this, then we push up into this area, and then we correct, and then maybe we break. Who knows what happens at that point? But I think, like, to stay with this trend here and call this a correction, then we have to correct somewhere in this area, right? And then see the market go back to the downside. That would create this N wave right here. All right. So we would have a 1, a 2, a 3, and a 4. All right. So that's what we would have, and that's what you would think the market was going to do. Now, if we break the cloud, then we could be pushing back up into this area, back up to the structure up there. All right. Any questions? You have never heard anyone talk about thick clouds. Usually when they talk about thick clouds, though, they tell you that a couple of things they tell you about thick clouds. They're a good sign of support and resistance, but they never tell you that how they could represent a bottom or a low. So let's just look at this area, and I'm going to show you that this represented a low here. Didn't mean it was the end of the low. This thick area represented this area right here, and I could pretty much show that to you. Let's back it up. Let's look at the cloud. Look how thick that cloud is. So for me, pretty much, I think about this being a low, and you could see there was divergence. So I would pretty much think the market was going to move up. That's what I would have thought. But also, this was a low. I know the market's not going anywhere right now because we got this big, thick cloud. I need to see some angulation. All right, so that thick cloud aligned, let me know that we were at a low. All right, and we were at the low. So now we start thinking if we break Keaton's and break this level, we'll probably see the market push up a little higher. But this market in this case broke lower, but the thick cloud was a sign that we were at a bottom. So then now we do see the angulation now. This is what we wanted to see. When we don't have that angulation, so let me draw this here. So you got a thick cloud, and then you start to roll up, then you know you're breaking levels. And that thick cloud now resembled the bottom where we were. That resembled this whole area. All right, and until we got the angulation, we got this move right here. And that's how you see it. All right, but don't automatically trade because we say we're at a bottom. We are at a bottom, but then we finally violated the low. But sometimes if you really get a good low, you come off of that low pretty good. Once you break structure, when we didn't break structure, we broke structure to the downside. So therefore now we look for our bounces back to the downside. The thick cloud alerted us not to trade here yet, right? So there's signs for it, and there's other times you're going to see that it does help you to go back the opposite direction. So those thick clouds are more than just strong support and resistance levels. All right, let's move on. CAD Swiss Franc. All right, not in love with this. This is bearish, pretty bearish. I do have a couple levels where I'm looking at possible bounces. We still are strong to the downside. Remember, this cloud is a little bit thick. It's flat up top, but it's still rolling to the downside. Once we get some angulation, it's going to move. In order for this to really be a good bottom, and this cloud's not really that thick. This is a thick cloud right here, right? This lets you know you were at a top right here. Let me go back and show you. If we say, let's just go to this area. Look how thick that cloud was. All right, but it wasn't rolling over yet. So at this point, I'm saying to myself, I think we got a top. Why? Because look at this level and then look at this cloud. There is angulation here, but let's see what the market does. Let's see more what it does, because I think we're at a top. That's what I would be telling you in this case. Let me remove some of this stuff. Now we're starting to see this flatten out, and this starting to roll to the downside and the market dropping. See how this helped you find this top and you realize this was a top? So what I would now do, if the market came back to this top, then I would definitely look for a divergence at that point. I would see if there was any divergence if it pushed back up to that top. Also, what alerted you in this area was things that we've been talking about. Look at the distance between Tenkan-sen and Kijun-sen. Look at how far price is from Kijun-sen. That's your big area where you have a nice C clamp. All right. And the market pushes back because you had that imbalance, and then the market drops. So those are things that you want to look for when you're trading with Ichimoku. So where I am now, I have the exact same thing. Not really like this cloud. That let me know. But here we are now. I don't have the exact same thing. I have angulation and I have a flat top here. Now, what I want to see is I'm still bearish because that cloud is not real thick. All right. It's a little bit thick, but it's not real thick. So I would start looking at my fractal level. We're currently at a fractal level. So at this point, I would be looking to short this market. All right. So I would be looking to short. We already have nice price action. So we had a rejection candle here, then an indecision candle here. The next candle makes a low. That would give us a evening star, right? But I'm not going to really wait on that. I'm going to look for an entry at this point. So I would be talking about trading the entry right here now. And remember, we walk the zone, right? So we could get a better entry than this, right? So when we trade this, we walk our zones. So walking the zone is just when price comes into the zone, you're going to move higher and you're going to move your trade up. So you should already been thinking about shorting this market, right? Because if you were already thinking about shorting this market, you would have walked the zone. So for me, I would put my entry, instead of putting it at this low here, I would put my entry right here short. I would put a stop loss slightly above this candles. I'll put a stop loss slightly above. My computer's messing me up. There we go. This level right here. So I would be here. This would be my trade, short to the downside. We're still bearish. There is some buyers coming in the market, but that's this just move right here. So I think we continue back with this trend. Ichimoku's all bearish. You got a Kumo twist that's bearish, all right? You are a little flat here. You still have angulation here. We want to see angulation back to the downside with span B, right? And then the next thing is Chiku spans below price. This is a good trade if we break through this level, break back down. And you already have your N wave. So I could draw a bigger N wave. I'm going to draw 2 N waves here. Let me do this. Let me show you where this thing took us first. So we had this 1, 2, and we say our N wave level would be here. So we still have this target we could shoot for off of this trade, right? Because that will give us this N wave target right here. If we look at this N wave. So this would be the 1, the 2, the 3, and then we get here will be the 4. Well, actually this was the 4 now. But we could keep this level here because now we're going to look at, again, we're going to add a level. So let's look at this now. So now we're going to look at the N wave in this fashion. Oops, I don't want to take away that. Let's look at this N wave. We're going to go N wave here, here, and then we think that this is the 3. So if that's the 3, then our 1-to-1 is here. So we could see it drop here. So I would be shooting for these 2 levels of profit. If this N wave is going to develop, it's going to take us to that level because we have 1, 2. Oh, sorry. I marked it wrong. I marked that part of the bigger wave because we're looking at the smaller wave right now. So here's 1, 2, 3, 4. That was one wave. That's your N wave. Then we go from the next high, right? So we're going to get rid of that and we're going to go from the next high. All right, so we go 1, 2, 3, and then 4. That's where we get that target from. All right, so that's going to be your target. You have this wave 1, 2, 3, 4, then another wave 1, 2, 3, 4. This 4 is not completed. All right, everybody understand? Pretty good. Is that too far from Kijinsen? We're getting some distance. All right, but it's not that far. And we're still close to Tinkinson. And we got angulation on Tinkinson, angulation on span A, and then we're flat on Kijinsen and span B. But I still look for the downside move here still. I don't see enough to tell me that we can't go any lower. Because we made this low and we haven't made a higher low, right? Haven't made a higher low than this low. So I'm going to continue to the downside. Those targets, those are the targets we would shoot for. CAD Yen. Good opportunity to trade CAD Yen short to the downside right now. I would basically trade this level right here. Short to the downside. You could do a couple things on this trade. This is a CAD Yen bearish market. All right. You could see bearish. What I tell you about that thick cloud? Let's back it up. See if I tell you the truth all the time. Let's go to this point first. Cloud wasn't that thick yet, but look at the distance we're getting on Kijinsen. So it wasn't that big of a thick cloud yet. But now it is. And for me, if we would have pushed back up to this level, I'm definitely thinking about shorting, especially if we don't get any angulation. Now look how this cloud is thick, getting even thicker. The market's not going anywhere. Now we start to see the rollover. And so now we should start thinking about breaking structure to the downside now. And then you could see it starting to roll over. And that thick cloud helped you to understand that you were at a top. All right, so thick clouds, they're good in a certain way. They're bad in a certain way. All right, so what I'm looking for is to short the market here. I'd be looking to take a short right here. You could wait for the Kumo breakout, but everything's bearish here. We got a bearish TK crossover, futures dark, Chiku spans below price, and price, when it breaks outside of the cloud, you'll have everything. You'll have your 3-row reversal pretty much for a Kumo breakout, because you got your crossover and price, Chiku span below price, and then you'll have a Kumo breakout right here, and that will be a trade to the downside. So that's what I would be looking at, shorting this market. Okay, so I would trade this level to keep my stop loss as tight as I can, so that if I lose this trade, all right, I can reevaluate and see if I can get back in at another proper level, or if the market closes where the candle closes, this current candle. Okay, so that's what I'd be looking for right now for a short. Now, where would my target be? Let's find our target. So here's how I'm going to find my target. I'm going to go just the 1-to-1 target. So this would be 1, 2, 3, right? And we would have been shooting for this one level down here. This market didn't get there because we didn't even get through 2 really. All right, so that was the issue. Remember I talked about getting through 2? So now we're at 1, 2, and 3. So we're talking about 1-to-1. This is going to be your target for this trade. We got 2 targets here that we're going to shoot for. One target is going to be this level here at about 86,532. And then we also want to get down to this area here at about 87. What's that? 87,656. That's going to be the first target because we want to get through that. We also want to get through Tinkinson. So these areas you want to get through, you want to break the cloud, get through Tinkinson, get through this 2 level, and then get to your 1 level. That's how you break your trade down. Next week, I'm going to talk more about the taking profits, your first profits and so forth. I'm not going to do it today because it's going to take too long. And let's remove this. Oops, let's put our target back here, this last target. And then we can remove this. All right, so that's what we're shooting for. I definitely got to shoot for level 2, though. So you first shoot for that level. Because if you can't get through 2, we're going to be at a triple bottom down here. And so when we hit this level, we've been looking for divergences, but I didn't really see a divergence. There was no divergence at this level. So we're getting kind of flat maybe. All right, so let's move to Swiss Franc Yen. So we got a breakout here. Pretty much talked about that last week. We were here last week and we were talking about seeing the Kumo breakout. I figured you could take the trade at this point. And that happened. And I told you we'd probably be shooting for this level. All right. So when the market was here last week, this was our breakout. Should have been looking for that. And then you would think about going here. So now we may get a little correction in the market. Where are we going to get the correct to? We're bullish still. So maybe we crack back to this fractal. If we crack back to this fractal, let's take the long trade again. If you didn't take the long trade already, let's look for this. So what we're going to be looking for would the market to be do this. So this would start this wave. Then we could shoot for this target. That will give us this top up here. And at that point, we'll see if we have any divergences. I don't know. All right. But I think right now, I would be looking for my trade back inside this zone here. That'd be my fractal zone right here. All right, so therefore I would go long, and that again would be the 3 level. 1, 2, 3, and we'll be shooting for 4. So that's it. That's what I see with this trade opportunity. Let me put that zone back. Sorry, didn't want to erase that. That's where we'll be looking for our trade. You should have been in trade already. All right, but Euro Aussie, let's move to that. Euro Aussie. Crossover is bearish. Flat cloud. On the crossover, on the Kumo twist, we had a bullish twist and the market didn't go anywhere and your cloud was flat, didn't go anywhere. And I think last week I told you that we would be looking for a trade off of this level to move higher. And we drew our end wave to get up to a certain level. Plus we wanted to get to this point. We never broke past this level. And therefore the market dropped back to the downside. All right. We got mixed signals. I wouldn't trade this right now. I'd be staying away from this as far as Ichimoku wise. Structural wise, we're breaking levels. So we're breaking like these fractal levels. We broke this fractal level, which was a good structure level. So for me, if I'm going to look at the market coming back to the downside, I do want to see Chiku span get through below price here. So more than likely it will be the Kumo breakout because we should have our Kumo twist at that time. And if we have that, we have a bearish crossover. We had Chiku span below price because you figure Chiku span will get below price right about this point, somewhere in here. And you should be getting your Kumo breakout at that point. All right. And then you should also have your twist should be bearish. Your crossover is bearish. And then what I would look for is the market coming back down to this level. Will we have any kind of divergences or so forth? All right. So if we did get to that level, so we want to look for that breakout. So we're looking for the Kumo breakout. We don't want to get too much distance from Tings and Keatons. And if you get a breakout and you're flat and Keatonson's still up here, then be careful. All right. So what I like to do is box the market in. There's no need for me to do it here because I like to box it in here, but we're inside of a little zone anyway. So I boxed this market in, whichever way it kind of breaks out is the way that I believe the market tends to go. All right. So for me, what will happen here, either we're going to break the cloud to the downside or the upside. If we break to the upside, we still have a twist that's bearish. All right. That needs to change. All right. And then your future is bullish right now. So I don't know. I'm looking for the breakout to the downside more than likely. I can see declining. I can see declining demand in this area here, and increasing supply. See this market drop. So declining demand, increasing supply. Here we're looking at the EuroCAD. All right, EuroCAD. Let's see what it's doing. Little flat here, little rollover, just in a correction. I don't know where I'm inside my TK zone, but I don't have like a good fractal level that I was looking at. Here we go right here. So we're sitting on this fractal level. And if I made it into a zone, it would look like this. So you'll learn that the fractal levels are my favorite areas to trade because they're S-wave patterns, which are part of Ichimoku wave analysis. And for this trade here, I would be looking at a couple things. So I would be looking to go long at this point. If we close below this zone, if we close below it, then I would think the market may push down towards Kijinsen area. All right. But right now I'd be looking for a long opportunity here. So the way I would trade this, since we walk the zone, you're at a great opportunity to put a long right here in the middle of the zone. All right. With a stop loss here. So you want to put a buy stop where we are right here, and a stop loss about here. You want to get through level 2. So you want to get through the cloud. All right. And then you want to shoot for your next level, your end level, which would give you, let's see where that end level is going to be. This would make us 1, 2, and this would make that a 3 automatically if we move off of that level. And then we would shoot for the 1-to-1, which would be right here. So right there. And then let's take that away. So we know those levels. We need to get through that point. We take our trade here. If the market continues to go lower, then we start to look for our trade here. And then at this point right here, if the market gets to this point, then we still have our 1-to-1, but our target is, we still have our end wave, but our target up here is going to change. It would then become like this level. It would be a little bit lower at about 1.48443. All right. So that's what I see right here with this EuroCAD. And this looks like a good opportunity to trade the market. Nice small stop loss. The reason we put a smaller stop losses is this. We're looking for momentum trades because we're coming off of the correction, and we look for momentum to take us back to the direction of the market, the current market. So if we don't have the momentum, we should have that momentum quickly. If we don't have the momentum, we don't want to waste time with the trade, because most of our trades are going to be bigger trades. Most of our losses should stay small because this is not a big stop loss right here for you. So therefore, when you see this stop loss with this kind of trade, because we have a nice zone, we're walking the zone, we push inside the zone. If we're at the bottom of the zone, we put our trade in the middle of the zone. If we're at the middle of the zone, we put our target or trade entry at the top of the zone. So we walk this zone, we're all the way at the bottom. We found a nice bottom here maybe, then we could trade to the upside. Ichimoku's all bullish, except prices inside the cloud. We need to see the breakout to see everything become bullish. All right, but I take trades right here at this level because I trade off of the bounce of the fractal levels also. So therefore, I don't really not trade inside the cloud. All right, as a basic trade for Ichimoku, you don't trade inside the cloud. All right, that's turbulence. Do we have to consider Chico span being inside the cloud or just being above or below price? Really just above or below price. Once you start thinking about Chico span, though, you could think that it could form resistance points when it hits these cloud levels, which would also be your current price doing that at that point. All right, so you could really think about that. Okay, but once I'm above the price, then I'm bullish. That's the main thing with Chico span. Once above that price, you're bullish. This cross over here is bullish, but it's a weak bullish cross. This is bullish, 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 and then price breaking out will be bullish. Bullisho. All right, so let's move. Euro CAD. Let's go to Euro Swiss Franc. Euro Swiss Franc still very bearish. Where were we last week? Right here. Actually, where were we? No, the 20th. Where's the 20th? Right here. So I told you this was bearish last week, and we could have been looking for an opportunity short. The market corrected itself and moved higher. Do we have any kind of divergence right now? No. We're having a hard time just getting through this low right here. And I think, again, guys, the markets right now, you know, your holiday seasons, I think after the New Year's, you'll see more of a movement. But we're having a hard time getting through this low. And there is no divergence, really. So I don't know why we're not breaking through here. But I would short this area again. So for me, I'm not going to short unless I'm at a level. So my trade would have been shorting at Tinkinson or Keejenson. At this point, I'm not at any of those levels. I'm not at any order blocks or anything. So since that's the case, then I wait for the market to do this. And I'm so particular with my trades, therefore I miss some trades. I want to see the market break this level and then trade back and then short. This is where I trade. All right. I don't trade anything else. I wouldn't want my trade either here or this level right here. So remember we talk about trading fractals, right? I'm always looking for the fractal bounce trade. So if I'm looking for the fractal bounce trade, we had a fractal over here. Right there. The market bounced on this fractal level once, bounced on it again. And then now we're bounced on Tinkinson. I want to see us get through this level here. This low at 103.802 is holding us up a little bit. So we need to get through that point. But I think we're still bearish, but I just don't have an opportunity to take a trade right now. My trade should have been already. I should have been in the trade already at this zone. All right. Euro Swiss Franc, can we box something in? Let me see what you're saying. Can we box the green candle in 1206.21? Yes, you could definitely box that in. All right. You can box that in. Now, there's a couple things I do with these boxes also. So you could box this in, wait for the breakout, or you could do this. So you can box it in and then watch to see if it bounces and then trade off of the upper level back to the downside. All right. But the box for me is just the breakout of this low right here. Because if it breaks the box to the upside, then we're probably going to see the market move a little higher. Who knows where it goes at that point. So for us, we want to see the breakdown of the box. Because you're inside one candle. This mother bar has some serious babies. She's got a bunch of babies. All right. So I know her belly is big. So we're looking at Euro Pound. I'm not in love with the price action on the Euro Pound right now. We do have a slight of an N wave here. Let me see. And price is so to the downside here. We have an N wave. We didn't hit that level yet. So we could see this. All right. So let me show you what I see here. Now, this is not strictly Ichimoku right now because we're flat. We're pretty flat. So I think that flat falls in between these levels right here. We're flat because we're between these levels right here. Pretty much these levels right here is causing us to be flat. So we're kind of flat in this area. You could see it. Ichimoku's not really helping you out a lot because we're breaking back above the cloud, break below, TK crossover, then another crossover, cloud crossover, then another cloud crossover. You don't want no cloud crossovers this quick and then flat clouds like this. So therefore, you're in a flat market. So probably the market goes from low, high, low, high, back to the low. So currently we got a little consolidation level here. So for me to break out of that level, we trade to the downside. That's where we could look at taking a trade and trade it down to this level here at about 83.835. But not much Ichimoku stuff here because we're pretty flat. We're getting mixed signals. All right. So that's what I'm looking at with Euro Pound. Euro Yen. We looked at this last week. So last week we were right here. All right, so I know what I probably told you. We looked at this low here, and we were right here. We hit this low twice. And I know that I told you guys this because we can see it, right? What do we got here? What's the issue right here? What do we got where I'm showing you those two levels? Somebody please tell me. Nobody knows? TK cross? No, not particularly when we're looking at this level, this flat level. Fluctuation, not particularly. I mean, we are flat, so we are fluctuation, but that's not what three bottoms. But what about it? What about the bottoms? It's basically two, but three. What if you want to really call some of them three? But even though we could have 10 bottoms there, what is happening right there? All right, about time. Cash flow. What kind of divergence is there? You said hidden bullish? Why would it be hidden? It's regular. It's regular bullish because we could see this, just regular bullish divergence. Guys, you got to look for this. Divergence. When you get to these lows, start seeing if you got any divergence. It'll help you to understand if we're getting weak at this level, if we may see a bounce off of this level. So when we hit this level last week, we did have a divergence on it. And this was the day that we were talking about this on the 20th. And the market pushed higher. All right. So I told you if we break this level, then look for the bounce off of the level. But more than likely with this divergence, we're looking for the market to move higher. But look what happened. Let's draw this all out. Let's go from this hit here and this hit here and this hit here. When we go all the way back here, we're right there. So we were kind of even right here with these to these points, right? But from this area to this area where we were last week, look at the increase in strength for demand. Look at the strong demand coming into the market all the way up to this point. And when we had that happen, look what happened. The market moved higher. This was demand coming into the market and it pushed this higher. All right. Institutional traders were not selling this market and it didn't go any lower. That's what you want to be looking for. Would this be exaggerated divergence? Why would it be exaggerated? Explain to me. I'm not sure what you mean. It's not exaggerated. It's strictly divergence because we have a bottom that's flat. When you have a bottom that's flat like this, let's just talk about the points to make it even easier. Let's make it the points. But these points are like bottoms that are lining up with each other. So when you have that, we have, let's just do it the easy way so you guys could really see. We're having a lot of issues with the divergence stuff. This is the one low. This is the next low. All right. The thing is, these are levels that are flat right here. So let's go back and draw this again. Make sure everyone understands this. This is the flat level. Everything has come back to this level. All right. So if you want to say that you think it's that you might think it might be exaggerated, is because you might say that this low and this low. So you might say that, okay, well then either way we still have demand coming into the market, right? But I don't see the market that way. I say this. So I understand what you're saying, but I see just just look at the level and we come right back to the level. All right. When we're not talking about the wicks, we could talk about all the wicks. We could make it into a zone. We would just make it into a zone. And then we say, do we have divergence at that zone? So if you say we don't have divergence because we have from here to here, I'm not gonna say you're totally wrong, but when we come back to this same level, this isn't what's happening at that price. Price came back to this same level right here. And when it came back to this same level, which was right here, at that point you had the divergence. So just look at these two levels where price hit. They both hit this level. All right. And then you had demand at that point, right? So cash flows having issues with the divergence as far as, like you said, I sent the cheat sheet. I look at that's why divergence is challenging. Oh man, we can't let this divergence be challenging. I don't know how I see it so easy. I guess because I just look for the bottoms or the tops. I see that more than anything else. Just look at bottoms and tops. And if you have an increase in the market, you can't really call this an increase when you come right back to this level. But you have an increase of demand. But you can't really say that if you drop back to the same level. So if you drop back to the exact same level, but your low is a little bit off, you still come back to this flat level and you still have divergence. All right, because you shouldn't really come back into this level. Okay, now if you want to say, well, we didn't come to this very point low. This is why I'm confused, because we didn't come to this low right here. Let me show you something then if you're going to say this. We didn't come to this low with this low. Okay, well then let's back up then. See that low right there? You came back to that low pretty much. See this low right here? Right here. You came back to that low right here. And when you did, look what happened. So when you came back to this low, you were up here. You should have been even with this candle down here. You should have been down here when you came there, right? So when you came back, you shouldn't have been up here. You should have been down here with this candle, right? So let me draw that. Make sure you understand what I'm showing you. This candle right here, or this volume bar right here, should have been down here. If you want to break it down real tight like that for me. So if you break it down that tight, then you should have been down here with this bar right here, comparing it to this right here. All right. Even if we go to this low right here, see this low, which is this candle, you were up here. So that's the divergence. Oh, you're not counting wicks? Why are you not counting the wick? You have to count the wick also. All right, but a lot of times it doesn't. Sometimes it doesn't really make a difference when you're this tight, because you're talking about, like, you're getting very minute with it right here. So now you're majoring in the minors. That's what you're doing here. All right, because now what you're doing, you don't major in the minors. We're playing Major League Ball. We don't want to major in the minors. So now you're saying, well, we didn't come to this low. This is why I didn't count it. Or you're saying I didn't take the bodies. So this body is a little higher right here than this other body. So this body right here, if I take away the wick, didn't come down to this body right here. Now you're really majoring in the minors. Let me show you. How many pips is that? Let's say. Let's just see how many pips you're even talking about. Let's make this big so we could see where people are having issues. And I'm staying on stuff until I make sure people know it. So we're talking about maybe 15 pip difference right here, right? So we're saying, so what if I did this then? What if I don't draw my zone there and I say, let's see if they are even here, where this candle came down to. And I'm not going to count the wicks or nothing. I'll just count the bodies, because that's what you were doing, right? You're just counting the bodies. So if we're inside the bodies and this body came back to where these bodies were and it made a zone, don't look at the market as this line right here, right? Don't look at the market as this point right here. When we talk about like divergences and levels and double tops, this is a double. Let me show you what. This is a double bottom right here. It's a double bottom. Well, we didn't exactly touch the level. You're majoring in the minors. That's a double bottom. How close do you want to be? Do we got to be pip for pip? So if I'm coming down to 126.5 and I come down to 126.502, that's not a double bottom, right? Because I didn't go 501. I hit 502. So 502 would mean, no, this is not a double bottom, right? So therefore, I shouldn't look for a divergence because we're 2 pips off. Is this how we're trading? No, guys, come on now. You don't major in stuff that's going to make you change your mind because it's so minute. All right, look at the big picture. The big picture is that you are at a level, basically. And when you hit the level again, the main thing is that you have a level. And when you hit, mark this level. I'm not going to put the wicks, just so you don't get confused. When you have a level, if you come back to the level, my guys, then if you don't have this coming back to that same level, instead of going up, it's going up, you have a divergence. It came back to the exact same level. So you have a divergence there. If you don't want to look at it as a divergence, then look at it like this. Let's say you don't say, okay, there's no divergence. I'll say there's no divergence here. But we do have an increase in demand, okay, from this point to this point, right? Because that would be, let's make sure we have that at least. So let's say we have this area, which would be this candle, I believe, and this candle. Let's say they're not diverging because this one's 5, 6, 7 pips difference off of the wick. So if we say they're not divergence, well, we don't, okay, let's not have divergence then, but we do have increase in demand. Look at it. Right? So you have an increase in demand. So let me show you how you're going to major in the minors. Let me show you real quick. I can do it real quick. Would you trade that zone? Yes or no? Just give me a yes or no. Would you guys trade this zone? Just trading normally. Would you trade that as a support and resistance zone? Okay, yes. Everybody said yes. Well, then let me ask you a question. Would you trade this as a support and resistance zone? You said yes to both levels. Then what's the problem? We don't have a problem then, right? If we shouldn't trade both levels if we're gonna major in the minors. But if we're majoring in the majors, then I could say, well, guys, let's just include all these levels because support and resistance is this area right here. But if we major in the minors, then we say this is the support level right here. That's the support level. And we're not at support right here. We don't want to get that tight with our thinking, our concepts, because we're going to lose out on a whole bunch of stuff because we're not understanding the structure of the market. The market is not going to come exactly to these levels sometime. But the body didn't, but the wick did. It came back to this body. But it didn't come to the wick, you're going to tell me. So then don't look at it as divergence. Don't call that divergence. Then just see the demand coming in then. Don't call it divergence and just see the demand coming in. But either way, if we think backwards, when I told you about this, if there wasn't demand coming in, then this wouldn't have happened right here. And it did. We saw it happening. I don't want you guys to get lost in the sauce. And you guys are, some of you guys, this is the spot right here where the demand came in. And you could say, well, I didn't see demand coming in because I had this. This low was right here with this low. So this showed increase and so did this. Well, then follow the increase because you got demand coming into the market. Even if you want to say no divergence, but you did have demand and you did have a level, right? There we go. I can't explain it anymore better than that. So hopefully you guys understand it. If you don't, let me know. If you don't have it, tell me now, because I'll make sure you get it. And another thing to think about, right? Let's back up to here. This was last week, so this candle was starting to develop. So let's go here. What kind of cloud did you have? All right, so cash flow says, I understand much better now. I will have to practice this more. Bearish cloud. So you had this big flat cloud that was big and thick. So remember I told you about bottoms? Think about that too. So let's look at this divergence thing, because there's too many people that aren't getting it. This is price. All right. This is the indicator. What do we have right there? I need one person to tell me what we have right there. We have divergence, but what kind of divergence? We have bullish divergence. All right. So that's the price is coming down, but the indicator is going up, or the volume is going up. In this case, cumulative volume is increasing, which is increasing demand, loss of supply. All right, that's what you got there. So this case, what is this? This is price. This is the cumulative volume. What do we have there? Okay, we have regular bearish divergence. All right, making higher highs, but the volume makes lower lows. I mean lower highs, sorry. All right, that's regular divergence, bearish divergence. That's regular bearish divergence. The main things that I'm going to look for are two types of divergences. These two that I just showed you. All right, but so these are reversal divergences, because what you're looking at is this. You got to think about when you're at our main concept. When we think about trading, we're always thinking about being contrarian. That's how most people are. So if you see this right here, aren't you already trying to think that, well, this could be a low? Well, if you want to kind of know, then look at the indicator. This is the indicator. Going up while this was going down. And then if this does even come back to this level, then this better come back down to this level too. All right. And if it doesn't, then your divergence. Regular bullish divergence. This would have to come back down to this level. And then if it doesn't, then you have divergence, and we think the market will move higher. All right, so that's one right there. This divergence, regular bearish divergence. We usually have a top. Maybe there's another support level over here where we made this level. But this indicator, this volume, is doing that. Guys, if these don't match, think about there's something wrong right off the bat. This is regular bearish divergence. This is bearish. This is, if this comes back to here, then this better come back to here. Because if it doesn't, then I'm shorting the market. Even if it doesn't come back to there and it stops right here and tries to move higher, while this continues to drop, I'm shorting the market at structure. Or looking for my fractal bounce right here where we pull back to the fractal. And I'll short it here. By then, I already know the market's bearish. But you need to know up here that it's bearish so that you don't get caught in the long trade. All right. So those are the two main divergences you're going to look for. Now, hidden divergence. All right, let me back it up again to make sure you understand what to look for. When the market is moving higher and you want to know if it may reverse, then when you draw the market line, think about the tops. All right, because we're thinking about if it's going to reverse, is this going to be a high? Well, we need to see that divergence. All right, and then that would be the high. If you're thinking about the market moving down and then reversing off of this level here, think about the bottoms and compare the bottoms. So the bottoms on this would be, when I talk about bottoms, let's go, this would be a bottom, and another bottom. All right, this would be the tops compared to the tops. Compare these bottoms to these bottoms. Compare these tops with these tops. Now I'm looking at bottoms. I want to see if this is going to be a low. This attempted to come back, but it didn't. And this continued to make higher lows. We're already diverged. This market shouldn't break this level, we would think, and we would look for our trade, maybe breaking structure or pulling back the structure. All right, so those are the two main divergences, and they're both reversal divergences. I'm going to show you continuation divergence, which is hidden. Continuation divergence. Let's look at it on the chart more than likely if we could. I don't see it on here. And you have to use something else to really see it on this type of a move. But let me show you what it would be. All right, so now you're going to, if you want to see continuation of this trend, you're going to look for continuation. You're going to look like you're drawing a trend line, right? So think about it as a trend line. So continuation, draw a trend line. But for reversal, draw a trend line the opposite way. Or else, so this would be our trend line. So we're going to look at bounces, right? So the market bounces here, bounces here, bounces here, bounces here, started from here. Well, when I'm looking at my indicator, it's doing this. And then we get to this low right here, right? This low right here is this low. We were making higher lows, just like we are on the chart. But then all of a sudden, for some odd reason, this low right here is this low right here. That's hidden bullish divergence. See that low and that low? This low should not be below this low. This low is higher than this low. So this should be higher than this low. In this case, it's not. Look for a bounce off of your Kijinsen and to move higher. All right, that's hidden bullish divergence. I can't do a whole course on divergence right now, but it's in It's in the price action course, just one particular section for divergence. And I think I explained it probably better than I am now. I believe. So now let's look for hidden bearish divergence. And I probably could bring up another indicator to show you we have hidden bearish divergence on this chart, but let's do it like this. Let's just go with this area. So I'm going to draw it out. Let's just go with this quick area. High, call that the high, then this is the high, then this is the high right here. I want to see a bounce on Kijinsen, so I'm going to see if I have hidden bearish divergence. The indicator is doing the same thing that I'm doing. Whoops, let me start from here. The indicator is making that high, making that high. See, we're in line with each other. But then the indicator makes this high. Well, why did it break this high? That's hidden bearish divergence. I think the market's going to drop at my Kijinsen and I take a short. It should stay in a line with what we're seeing here. When something doesn't match or line up, there's a problem. All right, that's the best I could show you about divergence at this point. Please, if you want to know more about divergence, it's in the price action course. You guys have to review. The easiest divergences to find are the regular divergences. Just think about these bottoms. Look for, this is a bottom right here. Look at this. These two bottoms are the same. All right, so this is exactly the same this time. Pretty much exactly the same. Do we have any type of divergence here? That's the low right here. And it's right there. We're close to even, but we're slightly off. If I'm a major in the minors, I'm going to tell you there's no divergence right there. All right, so there's no divergence, I would tell you, no divergence. Here's another spot. Let's look at this. Look at this high right here. So we could call this not divergence, but you know what? This isn't really divergence. I would say you're not right at the level. Okay. Since we're going to say it like that, then let's go like this. What do we have then? What do we have then? Somebody tell me what we have. There we go, right on the nose. We have increase in supply. All right, maybe we don't have perfect divergence, but we sure do have increase in supply. All right, that's what we do have, and the market dropped. All right, and then when the market dropped, here's a level and here's a level. This is this level, this is this level. We don't have divergence, but we do have an increase in supply coming into the market. All right. And then you really see it once you start seeing here. All right, so we got stuck on this divergence, and I'm just taking a lot of time. But hopefully it helped you guys a little bit. I know a lot of people seem to be stuck on the divergence. So as I go through the charts, if I see more, I'll just mark them real quick. But right now we're just looking for, we're thick, flat, been flat. Flat levels, flat thing, everything's flat. No real strength of move either direction really, but we did start to break fractal levels. So we broke this level and we broke Kijinsen. For me, guys, I want to see what's going to happen if we correct back to this level. Then I may be looking for the market to move higher. All right, we're inside, Chico Span's inside price. Just slightly breaking above price. So we may see the market move higher. Look for the Kumo breakout here. In this case, I think we could pull back to this fractal level here and then see the market move higher. All right, that's what I think we might see. Let's move on real fast. Euro, New Zealand dollar. See this big gap here? So we were on the 20th last week. We were right here. And I told you guys that we had distance here. We're probably going to see the market correct itself. And it did correct itself. Let's look at this divergence right here real quick. Tell me, guys, do we have a divergence on this chart where I just drew this level? Is there a divergence, yes or no? What kind of divergence is right there? Regular bullish divergence. Let's draw the rest of it. So right here, everybody should be clear on this divergence. So we have no issues here. There should be no issues here. Let's do it a little bit different now. Let's not take this level. We're going to major in the minors right now, so I can get you guys from majoring in the minors. Now this level is right here instead of this level. This wick is not as low as this wick. Are these levels, is this a flat level? Are these levels the same? Yes or no? Well, before you guys told me this level wasn't the same because this wick is not the same as this wick down here. So I'm majoring in the minors right now, because in order to major in the minors and get you guys from majoring in the minors, then we have to think big term. This little wick is not the same level as this wick, but these bodies are the same level, and it came back to the same level, and it came back to a zone, and it's a flat market right here. So therefore, even though this is the lowest point here, this is a flat level right here. But this market is not flat right there. Based off of, you could see increased demand coming in. What happened? It took off. If you stay majoring in the minors, then you miss that. You say that the market may drop because there's no divergence, because this low is not with this low, because it's about 4 or 5 pips off. Therefore, we don't have a divergence. You can't be thinking like that. All right. Main thing is we have a bottom that we hit together. There's no divergence because this is too high. Guys, we got a low here. We're thinking about this low and this low. I didn't even include the wicks. Let's move down to the wicks. See this wick? Even if I say let's major in the minors, let's major in the minors. This is lower. This is higher. I wouldn't major in no minors right here. I would be saying this is the level, it's flat, and we're moving up. It may not be flat as you want it to be because this wick went a little lower. But guys, these bodies are right in a line. Now here's where you got confused because you only looked at the bodies. If you're only going to look at the bodies, then you might get a little confused. Add the wick and make it a zone. Look at the zone as a flat level. This is a flat level. So if there was no wicks on these 3 candles and we had this zone here, is there divergence? Yes, there is a divergence. Thank you. Now I think we should have this solved. So let's say this right here. There are no wicks on these 3 candles. And there's a low right here. Is there still a divergence on this chart? Good. You got it. There's a divergence on this chart. Okay. This zone creates the divergence. I don't care if this candle stops here or it stops here. We've got a divergence. This double top up here. This isn't a double top because this high didn't reach this high. Well, we got a zone then. Let's make it a zone. If we have a zone, let's even go right here. If we make this into a zone, then can I see a divergence? I can look for a divergence, but I really don't see a divergence. And this one would be a little bit easier to mark because they are not even. And I could do it like this. I could necessarily just go like this because these are a little bit off. All right. And then I would see if we have it. And we don't. Even if we didn't say that was a divergence, we could say these levels are flat right here from this wick to this bodies. We have a little slight divergence and the market dropped. I hope you guys got this divergence a little bit. Just this part of the divergence. Let's move on this chart. All right. So here we are, big C clamp. We had that distance and the market dropped like we thought it might. Now, where's it dropping to? It's going to break structure here if it goes any lower. All right. And then here's where we think that the market could come to. There's no other levels for me to mark fractals. These fractals are way too low. So the only levels that I have is the zone, the TK zone and your Kijinsen and cloud. So I'm thinking the market could come down to one of those levels. We're still flat with each cloud. So I really don't have a trade for you right now with this Euro New Zealand dollar. All right, so I'm going to move off of it. Euro USD, flat market again. We could be technical here and say that there's no divergence. And I would probably say okay with this because we're kind of like flat. We're not really flat. We're kind of like this with the market. But we do have demand coming into the market. Even though we don't have divergence. So we could look at the market now in this flat area. So what I would start to look at is the market inside this body. All right. And then even tighter, the market's inside this body. So for me, I need to see a break outside of the bodies. So we're inside of two bodies. We're inside this mother candle. And then we're inside this candle. We need to break outside of these candles to see where the market's going. All right. We see increasing in supply. I mean, the demand coming in. All right. So we have demand coming in, but we're not breaking any levels right here. Problem right there. We need to break this level. If we can't break the level, then we may see the market drop back down to the downside and then continue this bearish trend. All right. So we need to see that happen. Just like we did here, the market broke down, broke up to these levels. We saw demand coming into the market, and therefore we did have demand come into the market. But we weren't really able to break through any levels. We stayed with the structure. We did break a little bit of fractal levels here, but then you saw big supply come into the market, but we were opposite. This is another sign. I'm not going to even get into this with you guys right now because I don't want to confuse you even further. All right. So just see that we had a bearish engulfing, a major bearish engulfing. So what was that major bearish engulfing when we saw that come into the market? What was that? Anybody? What was that? Okay, there you go. It was an order block right there. So what should we have been looking to do right here? Buy the market, sell the market, or nothing? We should have been looking to short the market. So maybe this first area where we broke and then came right back real quick, you probably didn't trust it because you still showed increase in supply, demand coming in. But then this second block, the second time we hit it, you should have definitely been thinking about shorting that market there. And then you see what happened. All right. All right, guys, so let's move on. Pound CAD, flat market. Everything's flat, real flat. I'm not giving you anything on this. The market's not going to do much the next couple of days anyway, because you got New Year coming up. And then after that, we may see some things. Here's pound CAD. I need to get through these things because now we've been like almost 2 hours. Okay. So we got a big thick cloud with a C clamp here, flat Kijinsen. Look for this market to pull back. All right. We flattened out on demand. We flattened out. So I think we're flat here. You got a rejection here. We could pull back to a couple levels. These fractal zones are too big for me to really mark. I'm going to mark the farther fractal that's inside the fractal zone. Look for the market to pull back into this area. Now, it could also pull back to Tenkan-sen or Kijinsen. So with the pullback, we want to see the market break the cloud. So if you're not sure of where we bounce, because we could just bounce on Tenkan-sen and then head higher, or we could come inside the TK zone and then see the market move higher. So what you want to look for is this. You want to see something like this because you're probably not feeling secure to just take the trade anywhere. You want to see a bounce on this level and then a move higher. Or you want to break, come down to our fractal zone here and then move higher. If we break that, we come back to your Kijinsen, then move higher. At which case, you could just wait for the Kumo breakout if we don't pull back that far, and then wait for the break. If we pull back too deep into our zone, then look for price action entry here. If we pull deep into the zone, put your entry above the zone. If it doesn't trigger you, it goes down to the downside. You don't get triggered, then you take that off the table and you look for a bounce here. We're bullish here. We're bullish here. We're bullish here. So we just want to get this trade outside of the cloud. I'll trade inside the cloud off of the structure levels, which would be my Kijinsen and my fractal levels. Other than that, I'll just wait for the Kumo breakout. All right, and then you have your trade there. Okay, clear? Let's move to the next. All right, so I think this is a good opportunity to short the market. All right, now, was there any divergence right here, guys? Yes or no? We still have confusion. I hear yes and no. So we still have confusion. I don't know how to fix this. I really don't. This is a flat level. What's happening here? That's not bullish divergence. All right, there's still supply coming into the market. All right, so we just look at this level. There's no reversal divergence here. We're not looking at a reversal divergence right here. Okay. So there's no reversal divergence. When we hit this flat level, there was no reversal divergence. If there was, it should have been going like this. And actually there is in the longer term. All right, but just from this area where I'm showing you, there's no divergence. But if we look at the bigger picture, yes, there was a divergence. But the bigger divergence is like this. So maybe this is where you guys were looking at. But I was asking you to look at this level. Because we didn't need to look at this point anymore. We could just look at this. But yes, for sure, there is a divergence if we do take it back and look here. There's divergence. But see, we flattened out, so I wanted to start to see the bullish divergence at this level instead of the overall divergence. Yeah, we had divergence here. So we should have started seeing, like, I didn't want to see another flat level. I wanted to see the market increasing. And finally it did. All right. So there was really no divergence here. The overall divergence there was, yes. So what I think we're seeing now is my fractal's too big to mark a zone, but there is a fractal over here that I'm going to mark. And I am going to make a zone because see this fractal level right here? I'm going to go from this fractal to the low of this fractal. Our crossover is bearish. All right. We need to get through that level. I don't see this market. There is divergence, but not much. I mean, there's major divergence here, but we pushed off of the level. So we could see the market come back down. We rejected here. I would look for my short right here. All right. And then I will put my stop loss above this level. If you're not comfortable with this, then I would just wait because you're inside the TK zone. So all you then want to see is break outside of the zone. Here's your TK zone. Let's mark it. We're currently inside the TK zone. When we close outside of the zone, that's where we trade to the downside. We want to follow where the direction of the market is right now. Everything's bearish. Chiku span's bearish. Our cloud is bearish, but our cloud is big, fat, and thick, but it's not rolling over. So that's a good thing, which lets us know that we may not see the market move higher, quite possibly right yet. So if we break below this low, this area here, this TK zone, that's where I'm looking at it being a short. All right. Is that an order block? This right here, yes. So you'll be looking at the market coming back here to go long. All right. That's an order block right there. All right, so now we talked about this last week. We were here last week on the 20th. At that point, I may have told you there was slight divergence, but we could get, let's be real technical then. We're not going to call any divergence right there because this from here was increasing. We were decreasing a little bit here, but then we started to increase. So we have increase in demand coming in. Then we broke we broke structure here, and then we moved higher. So in order for us to know where the market was going, we had this resistance cloud here. So nice resistance. I think we could see a slight pullback and then move higher. Our N wave structure has changed, right? Because we were going like this. Waves to the downside. Your downside wave stopped right here when it broke this structure right here. Because if it was going to be an N wave to the downside, it would have to be this. 1, 2. It can't break this level. And then we would have broke this level. But we didn't get that. So now this is the start of a 1, 2, 3 reversal. If we get a little correction, then move higher, break the cloud. Now this drop, I like to mark these boxes right here because if we close above, I'm going to trade it long. All right, but I'm looking for a trade back down to, I'm looking for the market to come back down. I don't know how far the pullback will be. All right, the reason being is because I don't have real good structure inside this area because my wick is too big. So I'm just going to mark it as a level to look at, but I don't love it because the wick's too big for me to make it a zone. If I made it into a zone, it's too big of a zone. So therefore, we would be thinking the market's coming back into this area somewhere to trade long. All right. And we want to continue to see that increase in demand. So once we see a break of the line and we do break the cloud, then I would say that we are strong to the upside. Chiku span is currently below price. Your future is dark. We're just reaching up to this level where we hit resistance. This is where you want to see the market drop back to the downside now. All right. And this is where you want to be looking for your short. And it would be boxing this in and quite possibly taking the short there off of the break. All right. But then remember, we broke structure here. So I want to make sure we get back through this level. I'm afraid of these types of trades. I'm in the middle of a trade. Everything on Ichimoku was bearish, but my structure, I broke structure and I'm getting increase in demand. So I'm kind of nervous of these. I want to see supply come back in and break this zone, and then I'll short it. All right. So I'll keep an eye on this. We'll update this as the week goes by. Pound New Zealand dollar, pretty flat market. We're inside of a candle here. I'm not going to give you anything with this. The wicks are all over the place. If you wanted to trade this, here's what I would do. I would just mark these levels, then go down to like a 1 hour time frame. Mark that level. And then I would take Ichimoku off my chart. Make sure I define these levels a little better on the lower time frame. Take Ichimoku off the chart. Fix the range. So I would do this to trade these levels. I would hide Ichimoku. And then I would trade these levels, bounces of these levels. Currently we're flat here too on the lower time frame. So I would trade the bounce of these levels because you don't have anything on your daily time frame right now. All right. You did hit some tops up here. Now look at this. So don't get too technical with you. But look at this here. So we move this. And I'm not including that wick because I'm just including this zone right here. We came from this high to these highs. From this high, which was right here, to this high right here where we are now. Do we have divergence? Yes or no? I have one person answer out of what? How many people are in here? We got 30 people in here. I have one answer. I have 3 no's and a yes and an I don't know. Good. I love that answer. That answer is the best answer. I don't know. Here we go. Let's look at the level. Right? Let's compare the levels. So we're going to compare this high right here to this high where we are. Currently, is there going to be a divergence? There's a slight divergence. All right. And if we go back to this market exactly, then we really don't have much of a divergence, because I think we're pretty much even with these highs. There's really no divergence. But there is an ascending triangle pattern. Pretty much we're flat and we're pushing up to the upside. Trending to the upside. And we're going to call this a flat level up here. So when we break this level, I want to see the market push back to it. Now, when we put Ichimoku on here, we do have a thick cloud. It's not rolling over yet, but if it does, this could be the top, and then we could see the market roll over. Maybe we pull back the Kijinsen or get inside the TK zone. So a lot of times, if you don't pull back the Kijinsen, because that's where we look for our trade, and it's really hard to get trades off Tinkinson sometime because how it moves off of Tinkinson. But if you get inside the TK zone, so if you get inside the zone, inside here, market drops inside. If it comes inside your zone but doesn't come all the way back to Kijinsen, then when it closes back outside of Tinkinson, that's your entry. All right, for your long. Okay. I'm almost done here now. Let me get to the next. So we're on pound USD. Pound USD. So structure wise, guys, look at this here on the bottom here. I'm going to move it over to where I'm talking about. From this area to this area, is there a divergence? Yes or no? Is it bullish or bearish? Everybody's right so far. We got it right. Let's go back here. Is there a divergence? My man said regular bears. Well, no. I like that, Q. You were right in the second answer. No, there's no divergence really. There could be a divergence, slight divergence, if you take it with these two here. So let me show you. And if you said no here, it wouldn't be much of a big deal. But here's where we are there. But think about this and look where we double topped that level. See that divergence right there? We're flat right there. We double topped right there. But what did we do here? So from there to there, we dropped. That was a good sign. And what helped you also on this one would have been, look at the rejection. And if you would have saw that it came right back to that level, all right, that's why you look for these quick double tops, double bottoms. There's divergence, increase in supply. You would have been thinking about a short opportunity here. All right, but Ichimoku wouldn't have allowed you to short the market because right now you've got a crossover that's bullish. And at that time you had a future that was bright. You would have been waiting until maybe down here somewhere to trade short. At that time, I wouldn't have traded short. I would have looked for a correction like we had here, then short. But I'd have been like, I wanted to trade this. So the only way I trade that is when I look at the market in aspect like this. All right. This is already a bearish market. Ichimoku had me bullish. This is a bearish market already. You can see we're making lower highs each time. And I'm going to show you, this is probably a great spot. Let's use something else because you guys won't see it. Let me see if I can find one for you here. Let's use Ultimate Oscillator. We're almost done here. Ultimate Oscillator, there it is. Actually, let's use RSI. No, let's use stochastics. I believe I can use this on this point. Yep. I'm gonna change this so I only show one thing here. I want you to see what the divergence looks like. We're only gonna use the K line. All right. Look at this level right here. That's where we are, right? Look at this high right here. That's where we are, right? This high is higher than this high. Well, not on here, it's not. So in this case, we have this. And actually this high started up here, but let's say even if they're even, this is higher. That is hidden bearish and I go short. And I got a double top off of another level. I short the market at that point. See that? That's hidden bearish, which is a continuation divergence. Okay? All we see here is this high and this high. They're a little bit lower than each other. That's this point. All the way over here is higher. Trading off of this, I would take my entry. I would take my entry and just trading price action. I would be short right here. All right, see the market? That's it. That's the divergence. And I'm going to show you now that you saw it well with this. Let me show you it now. Let me show it to you with the volume. Think about the area. Look at this high right here, right? Either where we put it, but look at this high. Now, do you see that divergence? This is higher. It should not be higher. This is lower. Let's mark it. Let's make sure you see it. Let's make sure everybody's clear with this stuff, because I'm not leaving nobody behind. This level is what we're comparing, because this is the high. This is the next high, swing high. It's lower, but not on this chart, not on this volume, cumulative volume, it's not. Therefore, that's a hidden bearish divergence. And look what happens. All right, and then you drop. Does everyone see that? They shouldn't even be equal. This shouldn't be equal at all. Even if these two were equal, right? And a trend to the downside. Now we're looking at a trend now to the downside. Let's say these were equal, but this was higher. This would be hidden bearish divergence if we're talking about a trend. Now, if we're talking about this being just flat, and I'm looking for a reversal because we were coming up this time, right? We're coming down So we're trending. So that's the big difference here also too. Maybe that helps understand some stuff too. Look at what we're doing here. So we're going down. But now if we were doing this, let me clear that. If we were doing this, erase this area, and we were doing this. All right, now when I look at these two levels and I see this, there's no divergence. All right, as far as bullish, and I wouldn't call that hidden bearish divergence either, because the trend is not down, the trend was up. We're talking about continuation divergence. If this was talking about trend, then we would be thinking it would go that way. So therefore, we didn't have a divergence if we were looking at the market, if it was coming up. Is that clear? Hopefully that's clear. Man, we put it in today, didn't we? New Zealand dollar, let's put the Ichimoku back on here. We're almost done. We got a couple pair left. And then I'll get this video online eventually. We're starting to trend to the downside. I'm marking this fractal because I want to see if we come back to bounce on it. We missed it here and we kind of missed it here. So we kind of double topped here. Let's look at see if there's any divergence here. All right, so we're talking about the market, and we're not super strong as far as trending, but we are trending down here, right here. All right, and there is no bullish divergence coming in right here. Actually, there is, and we already moved, so I'm not going to count that. So I'm looking at this trend right here, this small trend, trending down. We broke structure a little bit. We tried to. So what I'm going to consider this is still a bearish move coming off the downside. If this is a bearish move right here, because we weren't coming up to this level, this first low high, we weren't coming up to it. We were coming down. So we're trending to the downside, and we didn't close above it. So currently, the way Ichimoku looks, I would think we're going to break above this level. All right, I think we're going to move higher. So, but what we see here, we could see the market breaking lower. So I would mark this, I would box this. And then I would probably just wait for the trade outside of the box. All right, because we are still bearish here with Chico spans below, our future is dark. We just broke above Kijinsen. I think when you close back below this level, that's your short. So at that point, I would look for the market to push back to this low. If we push back to this low, guys, then compare the divergence. Because if we get back to this point, say we close here, I was short here, and then the market goes here. All right, then you're comparing these two lows with what you have here. So if this goes down, then finally you get it here. Then you would compare these right here. Actually, this one is here. So you would already probably not have the regular divergence, bullish divergence. All right. But if we close below Kijinsen or close below this zone, I think we look for the short at that point. Everything's bearish on Ichimoku. Breaking that structure, though, is big to me because it started a new 1, 2, 3 reversal to the upside. So that's why I box it in. And whichever way it breaks out of the box, that's where I'm looking at. Then we'll probably look at the Kumo cloud then. All right. So we'll get a Kumo cloud breakout. So I'm not 100% confident about this short. I want to see it close below this level. And I would short it, but I don't know if we're going to get down to this point. Because then we would probably see if we had divergence there. I don't know. I don't like that all the way back to that level. All right, so here's the New Zealand dollar Swiss franc. Flat cloud, very flat. Look at the distance on Tingers and Kijinsen and look at the flat Kijinsen. Remember I told you when you get distance, you get a thick cloud, consider this a bottom. So we had it a bottom, then we made a little bit lower of a bottom, but look what we had happening right here. So what's happening right here? Does anyone see anything? I think, was you answering this already, DQ? Yes. Okay. You already was answering this. You called this a trend to the downside. I mean, you call this bullish divergence. And you correct. You are correct. Bullish divergence. So we did have a move off of that divergence a little bit. So I want to see now, is the market going to break this level? The way everything looks, you're flat, you got a thick cloud, and you got distance with Tenkan and Kijun. They don't want to be that far apart. All right, so I think you're going to see the market move higher at this point, or else it's going to stay in this area and do nothing. But I think you will see that move higher. We may get a little correction, a little bit lower, but then I think we break higher. Okay, this is a big, thick cloud. We aren't getting that rollover yet. So we could see a little bit more of a drop. I wouldn't trade this yet to the upside, that's for sure. I would short this on a close below this level, but it may close too low. So you could trade the level right here. What am I looking for? We could trade this rejection right here because we close outside of the TK zone, so we can short right here. But I don't know if you get back to this level. I would be worried about this trade. All right, we did have the rejection. We had another rejection here. And with this rejection, we drop. Then we have another rejection here. If we drop, I don't think we get back to this low based on how everything looks. All right, but Chiku span is flattened out. Everything's flat. No momentum in this market. So I wouldn't even be confident shorting this market. All right, I would just wait on this market. All right, so we're at New Zealand dollar yen. All right, flat market again. Not really divergence. We're flat and flat. Now we kind of broke structure a little bit. We're bouncing off of Kijun. I would look to short this. Okay. Again, another one that I don't like because I don't see it getting back down to here just because of the distance here. But I do see a short opportunity here. Right there. All right. Look to short at this level. Put your stop loss up here. You're below Tenkan, you're below Kijun with angulation. You got a flat cloud and you're flat on top and bottom. You're not rolling over yet. You're still aiming to the downside on span A, so we still probably get a nice move, a little bit of a move to the downside. My issue is this structure level right here. So if we drop, you got strong structure right here. We could only drop, maybe drop only to this point. I don't think you get outside the TK zone, but I can't trade what I think. I have to trade what I see, right? So maybe we just take this short, all right, and then we look for the opportunity to get through this level. We'll see what happens when we get here. For me, it's not enough profit for risk what I'm going to risk. So therefore, I wouldn't take this trade right yet. I want to see what's going to happen with the market overall. So that's New Zealand dollar yen. New Zealand dollar USD. This is divergence right here again. See this coming to the downside? See that at this point, this started coming to the upside. Now we did have a start to see a little bit of an increase in supply. All right, so let's see if we break here and close below. I'm just not in love with these big, thick, flat clouds, but we could still see the angulation start after we break below this level. Then maybe we get a break here. With this divergence, I don't love anything about this setup. All right, but yes, we are below. One thing to look for. Let me get rid of this. Let me see here. I don't know. I would still short this, I suppose. We got a thick cloud, which is scaring me. Too thick. And we got increase in demand coming in. We did see a little bit of supply step in, but we didn't see any reaction. So I'm kind of worried about this whole setup at this point. Therefore, I would probably be careful with it. Did we come back to structure here? Yes, maybe. Yes, we did. Okay. And we're having issues getting through there 1 time, 2 times, 3 times, 4 times. So be careful with this. We could still see the drop. Tenkan Kijun a little bit of distance, but you could see a little bit of angulation. So with that angulation, Tenkan should be moving, and it's not. All right. So maybe we are going to get this move to the downside. I would look for the short at this point. all right, off of this level. And there was no major divergence here. The divergence was from this point, and we did have the move. So you didn't have divergence from like back here with this whole move. You were in a line. Low. Now you had a low here where you had some divergence, right? So that was a move to the upside. But then you had this from here to here. You don't have any divergence. You're the same. You're equal. Let's mark it. From here to here, we have the same thing happening. All right. And then we had a little bit of divergence here off of from this point. All right. This overall, we had no divergence, but we had a little bit of divergence from this area, which was right here. We correct. Now we see supply coming into the market. Maybe we get this short opportunity right here. Trade it back down. See if you can get through Tinkinson. If you get through Tinkinson, then shoot for this low. All right. I would also watch for this low right here, because you have some structure right here. But also you got, what do you got right there? You got this order block. So if we pull back to this level, if we short this, I believe we could get back to this order block area. And then at that point, we'll see what we have with supply and demand. I do see that supply coming in, which could lead us for this short trade, which I would be looking at right now. And the best way to trade it would be to block it in and trade below that level. And if your candle closes too low, you don't want to trade right on this level, because what happens a lot of times on these order blocks, the market's going to come right back to that block and then boom, move higher. All right, so that's what I see there. USD CAD, very good opportunity right now for a long. Now there is some divergence in here. All right, very thick cloud. Just because we have divergence doesn't mean the market can't move higher. There is divergence because, let me see where it started. I'm going to mark where we're seeing, but we're seeing demand, loss of demand right now, a little bit, but I'm expecting that on this correction, right? And where were we here? Let's see where this was. So we didn't have really divergence. We had a little bit because you had this move right here, small divergence, and then we had a correction. See that right there? And that was right here. So, and then the market dropped. This is where we're correcting. I'm taking a long right here. Putting a stop loss right here. Put my long entry slightly above this indecision candle. With a long here. If we still have divergence at that point, I see if we could get to this upper level here. That's why don't wait for your candle to close. Take a level trade. All right. Mark this again. I would take this trade at this level. This, if and anything, this will end up being a morning star. I'd put my entry slightly above. I'd probably put it right at this level. This would be a morning star if we get that. Plus we close outside of Kijinsen. We're bullish right now. Everything's bullish on Ichimoku, so follow that still. Divergence doesn't mean it's going to kick in right away. All right. So therefore, I would look for a long opportunity on the USD CAD. Here's the same opportunity that we had. We bounced inside the TK zone right here, bounced off of Kijinsen. Here, pretty much the same thing. Looking for that long opportunity. All right, so let's go back right here real quick. I know you guys got to go, but would you consider looking at this as what? Divergence or no? Yes or no? Morningstar does need the candle to close to be considered that, but we don't look at candle patterns here. Pretty much what we do is just box it in, right? Just box it in. So you box it in, right? So don't look at the candle pattern, because that's the way that keeps you from having to know any kind of patterns, really. So box it in. Trade outside the box. Is this gonna be considered divergence? Let me help you out a little bit. Let me confuse you. Here's a high here. Here's a high here. Do we have divergence? I just confused everybody. See, I told you. You sure did confuse everyone. Cash flow, I think I got you confused still. Okay. Let me erase that. This level and this level, we have a divergence. So some people are saying, well, we're going from this top. So they're saying we don't have a divergence. This is where I see that you guys are thinking about. You're thinking the wicks right there. So you're saying no divergence. Okay. Think about right here. So what if we do it like this now? So you guys are thinking like that. Let's now make it into a zone. The wick's so big, but we're going to make it into a zone. Do we now have a divergence just because we make this a zone? Do we have divergence? See, y'all changed your mind now that we did that. See? So therefore, look at it as a zone and then decide if you have divergence. All right. So look at it as a zone, but this is kind of clean for me because I just take all this off the chart. And then I look at this double top right here. And I see this right here. If I include the wicks, then maybe I say no. If I make it into a zone, then I say yes. Therefore, I always make it into a zone. Or else I just look at these bodies right here that are lined up perfectly together. And I say there is divergence. All right, bearish divergence. So please understand that, okay? And we're going to look at USD Swiss Franc. USD Swiss Franc, flat market. Everything's flat. Too flat to mess with right now. It's inside one candle for quite a while. As far as Ichimoku anyway. I would be looking to go on a lower time frame. I would take Ichimoku off the chart. And I would do this. Hide Ichimoku. Go to your lower time frame. Hourly or whatever. Fix the zone levels. Line them up a little better. And then trade these lower levels off of these lows. And you could still look for divergences at these points. All right, so here, let's fix this low a little bit. Let's make it here. So look at here. We're looking to trade a zone, a range on a lower time frame. Did we have any divergence at this point? Where we came back to the level, was there a divergence? There sure was divergence. Look at this from this point. Let's even just go from here. From here, it's kind of flat. All right, but see, this is still divergence because this is going to the downside. But this is not going to the downside. Let's say this is flat. All right, it's not going to the downside. That's divergence again. But if we go backwards, you could even see more divergence. And then we had a bounce off of this lower level. That's the level we're looking to trade. And then the market moved higher. We're coming back. If we come back to this level or if we move higher, currently we're inside one candle again on a lower time frame. So I would box it in and trade the break. I wouldn't trade the break to the upside, to the downside, because I'd be right into support. So at that point, what I wait for is a clean break, trend to the downside and pull back. So I'm looking for two things on this if I'm trading this. So basically, I want to catch a trade like this for sure, yeah. But if not, then I'm looking to do this. Either this is going to break to the upside, and at that point, I'm going to trade it. Or it breaks to the downside, and I wait and trade here. But if it violates the downside, I want it to violate pretty good and then come back correct. And then I'll short the market at that point. I never short in between here. I'm only going to short here. Eventually it'll correct itself, and it doesn't have to come back and correct up here. But eventually it's going to correct. I'm not going to chase it. All right. Either I want to catch this trade or this breakout of this range of this consolidation. All right. And you have even tighter consolidation with these 3 candles here. But I want to get outside of this mother candle. Good. Everybody clear? Hopefully you understood this. Let's move on. We're almost done. I know I keep saying that. I'm not going to talk about the Yuan. Actually, I put Ichimoku back on here to talk about anything. So the Yuan pushed up to some good levels. I think we're late with the trade. So the Yuan was pushing to the downside. We were bearish. And we always look for a bounce off of Kijinsen, which we had here, and we should have been short. On the 20th, what were we talking about? Oh, this is the hourly time frame. No wonder. Let's go to the daily. All right, so the daily time frame. Let's fix this. We're starting to get a crossover here. We got a crossover that's bullish. Our cloud is flat, kind of thin and flat. Was a little thicker, and we had a little bottom here. I'm not sure what the market's doing at this point. We got a crossover that's bullish. Chiku span is still below price. Everything's bearish. If we close below Kijinsen, I look to short at that point. Other than that, I just don't mess with this. We're inside the TK zone, and I really don't want to trade it to the upside yet. All right, so I just let it go. USD JPY, bullish market. On the 20th, we were right here. And we were talking about the market breaking above Kijinsen. At that point, we could go long. You are bearish with a crossover, though. And Chiku span is inside price and getting ready to be below. We may start to see the market drop. So if this is going to be the high, so watch this. Let's look at this. Going backwards to here, this area here, is there divergence? Yes or no? No answers? Yes or no for divergence? We have one answer. Let me know, guys. Is there divergence? Don't be afraid to get it wrong. That's how you learn. I'm wrong on a whole bunch of stuff. So far, pretty much everyone is wrong except cash flow. Everyone's wrong except cash flow. But you're not wrong. You just didn't get this answer right. But what we got here is bearish divergence. Right here, right? We have bearish divergence. This one is really evident. We don't have to confuse, like, are we bouncing on this wick or not? This is really evident. All right, so you have that. That's a bearish divergence. Now let's move a little farther. If this market's not going to go any higher, even if it goes a little bit higher, do we have anything here? We have still bearish we have hidden bearish divergence. Let's look at this high. This is the start of the trend. So if we're starting the trend, if this is going to be the high, it may not be, because we may still break this high right here. We may still come up higher. So if we can't get any higher past this level, we'll look at this as the trend to the back to the downside. This is the start of a 1, 2, 3 reversal anyway, because we have 1, 2, 3. In order for not to be 3, we need to break this level. That means this market still has to come higher. If it doesn't come any higher, then we have hidden bearish divergence. Looking for the market to move lower. Look for that breakdown and then a breakout. Bearish cross, bearish TK, bearish Kumo twist, bearish TK crossover. Chiku span is right here, getting ready to be below price. And we're starting to see the breakdown. And you're starting to see it there. All right. The weekly shows divergence. Let's look at it real quick. Oh, man. You guys exhausted me. I'm not going to be able to do anything else till next week. Like Jesus praying in the garden when he he prayed so strong that he was bleeding. I'm trying to teach you guys this so hard that I'm bleeding. Okay? I'm bleeding, sweating blood. Because I'm hoping I can get this across to you. Some people would say there's no divergence, because they would say, they would get technical and say, well, this high, all right? And then we would say no divergence. I'm going to break it down for you. Let's say there is no divergence. You're starting to see increase in demand coming and supply come in a little bit. But for me, I'm going to look at these highs, this level like here, this flat level, and then I'm going to make it into a zone. So now when I say zone, it changes the whole concept. Because now you have a zone, we're even. If we're even, then we should be even here. But we're not. We're lower. All right. So therefore, just saying one thing changed this whole concept for you. Zone. Highs and lows. No, zone. All right. Change the concept. So that zone, if we're even in the zone, you're even if you touch this level and this level, you're still even. If I make the zone up here, if I made a zone up here and said this is the zone, we're starting the zone here and here. You're even right here. They're not even there. No zone's going to be that big, so that's realistic. That's not realistic. But this could be a zone. Then you would say, well, you didn't include that wick. That might be a news candle. We don't usually get a candle like that. That's outside of the norm. Okay? And then if we were getting a candle like that, well, that's a major rejection candle at a support and resistance level. We should probably be thinking about it going to the downside. So for me, like on the weekly, I think we do have a big thick cloud, and the rejection and the level and the little bit of divergence coming in, we could correct back down into the Kijinsen. Let's mark Kijinsen. Then we'll go to the daily and we'll say where the daily may drop to. So we go to the daily now, and that daily Kijinsen is here. So watch the breakthrough, because if we don't get through the cloud strong, we're still sitting on a weekly Kijinsen right here. All right, so I see a breakdown here. I think the market may drop a little bit. All right, so let's move to the next, which is Mexican peso. The crossover is bearish. We've broken structure levels. I'm not going to do anything with this thing right now, because I need to see a breakthrough of the cloud. Because for me, really, I think the market could come back to this level and bounce and then continue back to the downside. So we get a correction back to this level, because we're going to get too far from Kijinsen. So once we get too far, we may be able to drop down to this point before we correct. But then I think we get to this level to correct a short at this point. All right. We're kind of off because we had a big move here. So, and this could still be a big giant N wave, but the immediate move is N wave to the downside. Which way, how far would this thing take us? Yeah, that's good. This would take us about right here, target wise. So two targets I would be looking at. Let's remove this. I think I wouldn't trade this until I see the correction, which could be back up at this level. But I think if we overall, we could see the market drop down to here or to this point here at about 20.06410. That would be your 1-to-1 of this move. And here's the move I'm talking about. This would be the big N wave 1-to-1 measured move. All right. But I don't want to see the market continue there. Now, if we break the cloud without correcting, then I would short it, but I would think we would get to this level before we correct and then attempt to get to this level. But I mean, I could be wrong. I don't know. Those are the things I look for. But also, if we don't get through the cloud and it's thin and sideways, I want to see a correction back to this level. And then I'm going to short for real all the way down to one of these two levels. That's what I would do. Let me get rid of these. Somebody's asking me if there's divergence if I zoom out a little bit more. I'm not seeing it. Okay, yes, I'm seeing it. What you're talking about. Are you talking about this divergence with this for a trend, which would be bullish, hidden bullish? I wouldn't consider it right yet either, because this low is the one I'm looking at first. We didn't make a low yet with this, so we can't call this a low yet until we correct. So this low could end up being down here. All right, in that case, you wouldn't have any divergence. Now, if this was a low, it started to correct, then I would think we may have hidden bullish divergence and could see a move back to the upside, right? But at this point, what I'm going to look for, cash flow, don't overthink this thing. I think you're getting like overthinking this thing. All right. First thing, look for certain types of divergences first. Don't look for everything. Look for double tops and bottom divergences right off the bat. That's what you want to just worry about right now. That's what I basically look for. So what I'm going to be looking for is there a divergence if the market gets down to this level. I'm really not too concerned if there's hidden bullish or bearish all the time. I mean, I am concerned because I want to trade it, but it's the most easiest ones to see is this double top, double bottom levels, are two levels that are the same basically. All right, that's what you really want to look for. Here's levels that are the same when the market was moving, and you would have taken this thing, looked at this and said two markets are the same right here. All right, what do we got? We have divergence right here. All right, well, we can't have divergence because this wick's a little bit higher. It's a little bit higher than that wick. So we shouldn't, that can't be divergence. It is divergence because these levels are the same. The market drops down to this point. You could see there's a divergence here. All right. And what happened? The market dropped. Okay. Because you had a flat level here and you had divergence here. Increase in supply came in. The market dropped. Right. Don't overthink this. Look for this type of divergence right now. Look to see if you got a divergence right here, flat. You're flat. Look to see if you got a divergence like here. Anything here. You're flat. Call these flat levels. If you don't want to call these flat levels, then make them zones. And now look for a divergence. All right. So now you would look for a divergence. You got a divergence. These are flat levels right here. There's a move up higher right here. That's divergence right here. And the market moved much higher off of this divergence. You want to get real technical and say this isn't divergence? Well, let me show you. If you get real technical, then maybe you could say that, because you will say this low right here and this low is higher. So therefore it would eliminate this divergence that I'm showing you right here with this low and this low. Then I would say, well, you got increase in supply coming in and increase in demand coming in anyway. But to be honest with you, this is a flat level. I don't think there's a trader that wouldn't call this a flat level. Well, there probably would be, but this is a flat level right here. All right. Do you agree that this is a flat level, guys, from here to here? Even though we have the wicks, is that a flat level? If you are going to call that a flat level, then now you need to look for a flat level with your divergence. There is no flat level. It's divergence. There's increase in demand. Therefore, there's a flat level with increase in demand. The market took off. If you get so technical that you say this is not a flat level because you got a low wick here, then still see the increase in demand. Don't get this technical where you're majoring in the minors. This is a flat level. All right. This is another level right here. You could just look at the market. Divergence, look for divergence right here. All right, see this level? These are all flat levels. This is a flat level. You could again say it's not because this one is higher than this one. These are flat levels. Would anybody agree with me? This is a flat level. If you agree that that's a flat level, then look for the divergence. Let's see if there's divergence. Let's compare those levels where they touched each other. One level there and this level here. There's no divergence. All right. And then the market dropped to the downside off of increasing supply. Now there was no divergence, plain and simple. All right. But that's where I look for divergence right there. That's where I look for divergences right here. This would be where I would look for divergence because I would put a line right here and start to say, is this level a divergence level if the market comes back to this level? All right. So that's how you're going to look for these divergences. Don't worry about looking for this divergence right here. Continuation. This is looking for a continuation divergence where you see if this is higher and so forth. Just continue to look for the bottoms to find reversals because this is all flat levels where you'll be looking for divergence. Look at this divergence. This is like flat level and look at the divergence. And then the market took off of that level. All right. So let's keep this simple for you at this point. We're going to be studying this divergence stuff more. So I don't want you guys to get lost in the sauce with just doing this. Oh, I don't understand it because you're adding too much. Just think about the flat levels, top and bottoms. All right. Double tops, double bottoms. Anywhere where levels are even. See if there's a divergence. Anywhere where it's even. All right. Is it going to reverse at that even level? That's all you need to think about right now. Always think, is it going to reverse at a even level? If you're thinking that, then look for the divergence. If there's no divergence, then you don't have that to consider. Okay. Ooh. Let's go to the next thing, which is CRON. CRON is breaking down, breaking fractal levels, bullish market, bearish market, starting to show bearish structure, but Ichimoku still bullish. And you could see increasing in supply coming into this market very hard. Okay. You could see this move to the downside, broke fractal levels, N waves to the downside. Our correction could be, we're so close to a fractal. I don't love the correction level on this. This fractal here, we're right at it. So we didn't really correct that much. So then the next level, we could think if we're going to pull up into this zone. So watch to see if we do pull back up into this zone. But we're starting to see the breakdown. All right. So if we pull back up into this zone, look to short at that point. You got a bearish crossover. Chiku spans below price. Your cloud is big, fat, and thick. If you're waiting for this cloud, you're going to wait for the breakout, the Kumo breakout. And at that point, you still may not have it. You see increased supply coming into the market. I think this is a bearish market. I don't know if this structure is going to hold. We'll see. We already have a rejection coming in. But I do look to, for sure, to push off of this fractal level if we get there and put short to the downside. So if we break this structure here, then I probably missed the trade because we're too quick on the fractal that I thought about. We already bounced on it once. All right. And you can see where if you guys start thinking about order blocks, let's just go real quick. I keep putting too much stuff on the plate, I think. So let's not even talk about that. Let's not even look at any order block right now. Let's go to BTC USD. BTC USD. We could have called this all week long. We could call this every single day of the week because we saw this last week. We were on the 20th last week right here. I told you guys I drew this level for you. I told you that there was a divergence here, and I told you that the market was going to move higher, maybe up to Kijinsen. At that point, we may get a correction. But we already knew from the 20th that we thought the market was going to push up higher. All right. Because we had what? This flat level here. And I only drew it off of the bottoms right here. These wicks, they all touched each other. That was perfect for us. Therefore, we didn't have any confusion. So if I go to where they all were touching, that would have been from here to already to this point. The 20th was right here where we are. So we saw this divergence, and we should have been expecting the market to push off of this level maybe. All right. And we had price action, and we did have a move up higher. Now we're bouncing on this Kijinsen. I think overall, let's go higher time frame real quick. I think overall, BTC USD is trying to recover. Okay. There's some divergence here. I don't know how strong that recovery is going to be, because look at this. And I think we might already have accounted for this. All right, that was the divergence we saw, and then we got the drop. So I think now maybe we could start to see increase in supply and demand coming in. We do have a bullish engulfing at a level here. So look at this level. At this level, there's no divergence with this time frame, but when we go to the daily, there is. And also when we go back to the weekly, everything's bullish on Ichimoku, and you're getting support from your Kijinsen pretty much. At the Kijinsen, you did close below the last week, but the last week after that, this past week, we closed above. We had a bullish engulfing. Pretty good sign. I do like to move a little bit higher. I don't know if we push all the way back up here, but I do like to move higher a little bit. So when I go to my daily right here, I like a move higher, because I think we get a slight correction, but we're already seeing this divergence that kicked in right here. And then we're still seeing an increase in demand. Now we may see a little correction and then move higher. All right. If we correct and push all the way back to this level, then see if there's divergence. So based off of Ichimoku right now, we should be still bearish, looking for a short opportunity back to maybe this level. And then maybe we break that and get to this point. But based off of Ichimoku, everything's bearish still, so still looking for a short opportunity. XRP USD. Let's go to the weekly real quick first. I can't really call this on the weekly. It's too flat. It does have a big P wave on it, but it's big. So I'm not really going to look at that. Structure wise, I guess I should, because the structure. And then here, looking at this, I can move this down. Still a P wave pretty much. I'll take it back here, line it out nice. All right, but then on the daily, we got broken structure, crossover, and we already talked about this last week. Last week we were here on the 20th. I told you we broke structure. We had we had increasing supply demand coming in. We now had the TK crossover, and it appeared as if we would see the market move higher, because I thought this could. I gave you two levels as a possible low. I gave you this level as a possible low, and then this level. I didn't think we would get to that level because we had increase in demand coming in, and we had divergence also right here, and then the market did increase. Now we had to move higher and the correction. So the N wave structure has now begun to the upside. 1, 2, 3, and then 4, shooting for 4. Where would 4 be if this is going to be 3? I'm going to go from 1, 2, 3, looking for this 1-to-1 here at about 1.15344. So if we stay here, if we can't close below Kijinsen, Tinkinson right here. Let me mark that 1-to-1. And then let me mark the... So if we stay, if this remains the low, this right here, then that will be our 1-to-1. And we'll break outside of the cloud. All right. So we got a crossover that's bullish. We got our weak bullish. We're still below price with Chiku span. Need to see that break above. We're flat here, but we're angling to the upside. We're rolling up. So span A is starting to roll to the upside. Our cloud is getting thinner as it pushes higher. We are flat here. No angulation on span B to the downside, which is good. So we do have a structure that's showing us that we could be seeing XRP move to the upside. All right. So a break of this low would eliminate what I'm telling you, and we probably see it push back down towards this level. All right, or towards Kijinsen. You could see on the VSA we are now bullish. Okay. So that's XRP. Now let's go to silver. Let's go to oil, then silver and gold, then we're done. So last week we had this rejection here. I already told you last week that we did have an increase in supply coming in. Demand coming in this rejection. I really liked it. We did get a move to the upside. Talking about breaking structure, we barely broke structure. We're still bearish because Chiku span's below price. Your TK crossover is bearish. You got a flat cloud and it's still not rolling over to the upside. I'm still bearish with this thing. I just don't like... I wouldn't trade it short right now or long. I would just leave it alone right now. What I would probably do is box this in and then see if we break below this candle's low body. Close below that, I would think about shorting because we're still bearish on our crossover. And we're still bearish on my VSA. Everything is bearish. All right, now I am showing increase in demand, but that's because we had this move. So overall, I think we're still bearish at this point. All right, so let me move to the next one, which is silver. Hypothetically, how would you play the P wave? Hypothetically, I would play the P wave. So basically, let me draw one for you real quick. I'm not going to go back to that one, but I would do this. So here's your P wave structure. Wherever the market comes, you make this. It makes this level. So pretty much you know what to do already, right? Just from me showing you that. So I'd probably go on a lower time frame and do it, but I would trade these levels. And then P wave, we're kind of waiting for the breakout of the P wave to trade, right? But for me, I don't trade breakouts. So I always wait for the break and the correct and then the move. And it may not correct back to the P wave structure, but it may correct back one of these structures, the fractal high or low, right? And that point, I would take my trade. So that's how I trade it. I don't trade breakouts pretty much, so I don't catch that first breakout level. Increasing demand coming in the market. If we get a correction, then we continue to see that. Look at the distance we had. We also knew based off of this distance that we could see the market correcting itself. So we were here last week, and I told you about the distance we had, which was too much. Now we're recovering some of that distance. Therefore, you're seeing the market move higher. We also had that demand come in. So I don't love anything with this right now. Just because of where we are, we're inside of a big TK zone. We got a crossover and a cloud that's not doing anything. We're flat. So at this point, I just remain patient on this silver. And gold is the last one we're looking at. So gold, I'm not in love with gold, but I do kind of still have a bearish bias with it. I'm not in love off the bat with it, but I'm going to stick with the bearish bias, and I would trade it short for a couple reasons. Let me show you. Look at this flat cloud. It's bearish, a bearish flat cloud. This whole area is flat and bearish. Then look at Kijinsen, pretty flat. Look at Tinkinson and this flat area. Everything's flat, nothing really happening, and it's because of the time of the year. So really, with that said, Chiku span's below price, TK crossover is bearish, my future's dark. I would put a short right at this level. All right, and I would trade to Tinkinson. And if I can get through Tinkinson, I would be see if I can get to the next lows. I will go to these lows here. I will go there, here, and then I would play these wicks. All right, that's what I would look at. All right, Ray, thank you. Appreciate you. Thank you very much. And we're pretty much done also. But that's what I'm looking for right here. I would trade this Kumo breakout because we're bears. But we don't have a lot of momentum. And I think this whole week you probably won't see much happening. New Year's coming up. Then we might start seeing stuff happening. A lot of institutional traders, holidays, breaks, and so forth. They move the markets. You're probably not going to see a lot happening at that point till they get back. So anybody have any questions that I need to answer real quick before I leave off of this big 3 hour and 10-minute session? We had a good one there today. Hopefully you guys learned some stuff. Hopefully this all is helping you. Cash flow, appreciate it. Everybody else, I appreciate it. The trading plans are still in the works. I'm going to post, hopefully I can post my template for you guys by the end of the week. I'm trying to take the stuff off of it so that you can use your own template. It's going to be a it's a PDF, sorry. You'll just have the template and you'll have to develop your own. I'm taking all my info off of it so that you can put your own info onto it and create your own template for trading plan. Trading plan is different than trading journal. All right. So your journal, your plan are a little bit different than each other. All right. So your plan is going to talk about your strategy, everything that you do, risk management wise, and so forth. All right. Your daily routine, what you do when you get up. I want to ask that in our chat room. I want to ask everybody what's their daily plan. What's the first things you do before you start trading? All right. So we'll talk about that. But guys, I'm done. I'm pretty much done with everything. Hopefully this helped you. And until next time, guys, have a great one. God bless. So long.